Hello, future chartered accountants. For you to become a chartered accountant in the future, descriptive learning alone is not sufficient. The 30 marks of MCQ is key for every paper because that decides whether you get an exemption or not. So, welcome to CA Inter Law MCQ Marathon for September 25 and Jan 26 exams. What, sir? Standing in the garden, are you going to take the MCQ Marathon for us? No, guys. This is just a quick 2 to 3 minutes intro, which I want you to watch before you go and watch the next 3 hours of MCQ marathon, where I will be solving 15 case scenario based questions. Sir, only 15 are? No. These 15 are picked from model test paper, RTP, MTP, past exam question, and my own questions in such a way that all the 15 chapters of CA Inter Law, full Companies Act, and other laws are covered in these 15 MCQs. And you will never see a marathon where the entire syllabus is covered. And each chapter, there will be at least 2 to 3 concepts tested in this entire marathon, guys. So when you watch this marathon, you will learn how to approach MCQ. But before that, ensure that you revise the entire syllabus before you watch it. And if you want our guidance for revision, I have 3 other marathons that are very important. Companies Act concept and Companies Act workout marathon, both put together for 25 hours, and other laws concept and workout marathon for another 12 hours. These 3 marathons will come for 36 hours, and this MCQ marathon that you see is close to 3 hours. So, all put together, the free resources in CA Inter Law I'm giving you is 40 hours, guys. Believe me, if anybody is watching these 40 hours, 60 is not going to be a question anymore, guys. So go enjoy the MCQ marathon. In the description, I have given all the timestamps for every single question. Apart from that, I also have the MCQ case guide, which has about 60 plus case scenario questions. So where are you solving all these 60 plus case scenario questions? We have CA Interlaw regular class, which is for close to 100 hours. Then we have CA Interlaw workout batch, which is close to 60 to 70 hours. In those batches, I will be solving the entire case loss, guys. But here, for our YouTube family, I'm giving you 15 case scenario questions. That's about it. Go enjoy the lectures. But, one last thing, guys. I want to know in the comments, once you finish watching this 3 hours of MCQ marathon, how it is. Did you enjoy it? And thank you so much. Have a great day, guys.
So let's start off with the first case scenario, ICA mock test paper series 1, March 25. This additional heading is what we have given: audit and auditors, management, administration and incorporation. But promise, in some case studies, this will be given wrong. Okay, I have done it intentionally only. Sir, mistake in book. No, I don't know how to first not stop mistakes. I have done it intentionally, where in some questions, one will be extra chapter, one chapter may not be there. Sir, why am I doing that? Because if I am just doing copy paste from ICA study mat, then there is no value addition. Why I am keeping it like this? One, when somebody is doing self study later, if they have finished auditors, management, incorporation, they can solve this case study. That is one of the main reason we have kept this. Why I have made intentionally some mistakes in this is I don't want your mind to think and revolve around only these 3 chapters. Some other things can be from other chapter, so your mind should go there also. I don't want to limit your mind, because in exam we don't have that. Clear? So there are 2 purposes why we are doing this. Let's start off. Initially, few case scenarios. I will go at a slow pace. It might take us 15-20 minutes per case. But as we keep going, I will speed it up. First, I will start solving in the traditional way as to how you have to solve a case study. Read fully and then go to options. Later, what I will do, I will straight away go to options and solve. I will show you the reverse technique. So if you are doing 40 case studies, maybe 25 I will do in the normal way, 15 I will do in reverse. Is that clear, guys? Okay. New Limited, a listed company, passed a resolution in the board meeting for appointment of Verma Associates CA as the statutory auditor of the company. The company obtained written consent from Verma Associates and placed this recommendation before AGM, where it was duly approved. So what is happening in the first para till here? They have appointed a new auditors. That's it, for which they got the approval. After securing approval, New Limited informed the firm of appointment and filed notice of appointment to ROC within prescribed time. And Verma has 3 partners, ABC Vermas. Are you following, guys? Clear? What should you file when the auditor gets appointed? Section 139 talking about appointment of auditor. When the auditor is appointed, you have to file the form ADT1 within 30 or 15 days. That could be an option. We will go to 139 when there is a need. They haven't asked that question. Let's not confuse ourselves. The firm also takes service of two persons, Dev and Mia Verma, who work on case to case basis and not on fixed salary. The Verma firm has two more people. It is informed that prior to his appointment, Agarwal Verma and Associates was serving as the statutory auditor of New Limited. Now what ICA is trying to do, they are trying to confuse you with too many Vermas. That's the only thing so far. Okay. This firm has 6 partners. Which firm? So far now we have identified there are 2 firms. The first firm is over here, which is nothing but which firm, guys? Verma Associates. Second, you have this Agarwal Verma, which has 6 partners, which is Shrey Agarwal, Alam, Vishal, Dev and Mia. Okay. Notably, Dev Verma and Mia Verma were common members in both Verma and Agarwal. So again, that means they are going to test here regarding what, guys? Mostly regarding rotation of partners. I am anticipating question because if they are talking about common partners, who are the common ones here? Where are they? Yeah, Dev and Mia. Are you following, guys? Okay. Next. See, first question I am taking it slowly, guys. Clear? As we keep going, I will speed up. Okay. While working with the New Limited, Verma and Associates started facing severe disagreements with the management regarding certain financial and some governance issues. Okay, great. As a result of these persistent disputes, means continuous issues, like how in relationship always they are fighting, sir, toxic, like that, there is a toxic relationship between the auditor and the company. The firm decided to resign as the statutory auditor. Meanwhile, New Limited was also required to hold its AGM within the prescribed time, ensuring compliance with legal provisions regarding financial reporting, auditor, all of that. Okay, shout out approval, fine. However, due to internal conflicts and auditor resignation, company faced challenge in adhering these timelines. Of course, if there are problems, things will be delayed. Sir, I'm studying for CA. I'm going through so many problems. Of course, your preparation will be affected. Same thing over here. Additionally, New Limited decided to shift its registered office. Finally, they're talking about incorporation chapter over here. Okay. Shifting registered office from Mumbai to Bangalore for operational efficiency. Mumbai to Bangalore is state to state. Keep that in mind. Which section? Section 13 of 13 and what to say? Yeah, 12 and 13 read together. 12 is registered office, 13 is shifting of registered office from state to state. The company passed a board resolution for the change and later obtained shareholders approval in the AGM. Correct? Due to an oversight, the filing of the notice of change in registered office with the register of companies was delayed. So here they're talking section 13. Within how many days we have to file to the other party? As a result, several important communications including regulatory notices etc. were being sent to the old office, Mumbai, causing disruptions in the operation. Okay. On the basis of above facts, applying provisions of Companies Act and applicable rules, choose the correct answer. Fine. One issue in this MCQ, I didn't have time to change it before this batch. Okay. Yes, the answer is printed over here with the question itself. Ideally, I wanted the answer to be printed after all the questions. I will maybe try and change it in the soft copy later, but here we will try to read without that. Okay. Now what I will do, I will read the 4 questions and give you all time. Those who are watching recording, pause and try to solve it. Here, try to solve it by yourself. Every question on top I am also giving which concept is being tested, which is a reference for you to later go back when you are doing self-study. But we don't have time for self-study if you are watching this close to exam. The newly appointed firm Verma and Associates and retiring firm Agarwal have common persons Dev and Mia. Whether the appointment of Verma in the new firm is as per provisions of the Companies Act. That is first question. Okay, they are asking whether rotation is applicable over here. Second question. What would have been the position if Dev and Mia were partners in Verma Associates? What would have been the position if Dev Verma and Mia Verma are partners in Verma Associates? Second add-on question. So first let's finish the first question itself. Quickly try it by yourself. Take a minute. Try it. Okay. Let's resume, guys. Wherever needed, I will be referring to the concept book of mine, which is soft copy is freely available. Whichever book you are following, the same answer should be there in that book or ICA study mat. So quickly, First question, they're asking, what they're asking, if the proposed firm has common partners with the retiring firm, not applicable if individuals are not, sorry. They're asking whether the appointment of Verma and associates in new limited is as per provisions, just because there are common partners. What is the answer, guys? Go above and read the wordings they use for Dev and Mia Verma. Regarding this Dev and Mia Verma, what they have told, they were common partners in both the firms, but look at this, the firm also takes service of two people, Dev and Mia, who work on case to case basis and not a fixed salary. It is also informed prior to the appointment that Agarwal Verma was serving as auditor of previous firm. So here, if I go to Companies Act, if I go to section 139, appointment of auditor, they are saying common partners. This is the provision for common partners. Look at this. Any audit firm having common partners on the date of appointment in the retiring firm whose tenure has expired immediately cannot be auditor for how many years, guys? 5 years. Now here in this question, tell me which is the correct option, guys. What's the correct option? It is not valid since both the firms have common partners. That will be the answer as per section 139. Dev Verma and Mia Verma are working on case to case basis in Verma Associates and are not the partners. Hence appointment of Verma is valid. Have they given they are not partners? Yes, look at this. Who work on case to case basis and not for fixed salary. That means this Dev and Mia are not full-time partners. They're only working on a freelance basis. Therefore, second option looks more realistic for me. Dev Verma and Mia Verma are working on case to case. Okay. Verma and associates should expel Dev and Mia, not relevant. Agarwal Verma should expel Dev Verma, not relevant. So what's the correct answer, guys? Correct answer is B. Okay. Now again I'm telling you, in some options intentionally I have given the option here as wrong. While doing the question I will tell you which is correct or wrong. Okay. If you guys want to cross check the answer, just go to the mock test paper original source. You can find it if at all you want at a later point of time. Okay. Next question. Next question. What would be the position if Dev and Miyava are partners? If they are partners, now what will happen? Can they be appointed? Answer no. Go to the option same as MCQ 1. No. There shall be no change. They can continue. Answer is no. Appointment of Verma would not have been in terms of provisions of Companies Act. Yes. And company may obtain permission from shareholders. Just because shareholders agree, you can't go against the Companies Act. So answer is what, guys? C. Are you following? Clear, guys? Next question. Let me stop here. Yeah. Next question. In the given case, due to some dispute with the management, some issues resign from the company. Choose the correct option in respect of filling their vacancy. Now this talks about what? Resignation. Resignation is there in which section, guys? 140 talks about resignation. Resignation, what they are saying, very simple. If the auditor is going to, see like this, I will be revising provisions with MCQ. Okay. If the auditor is going to resign, what he should do? Can he resign, guys? Hello? Yes. Should he give any valid reason? No. He can resign anytime. One answer I saw. Before resigning, 30 days before resigning, he has to give a notice. No. How is that possible? I will resign today if my health is not good today. I can resign whenever I want. It's my wish. Okay. Once I resign, what I should do? Within 30 days, you have to intimate company, ROC and C&AG. If you don't intimate, there is going to be a penalty. That's it. Are you following, guys? Clear? Understanding? So come back over here. If you resign, what you should do, guys? Verma cannot resign and has to hold office. No. Remember, guys, we have the superior power to resign whenever we want. That's our choice. The resignation is tendered by auditor. The board shall appoint a new auditor within 30 days and such appointment shall also be approved by the shareholders in general within 3 months on recommendation of the board. One option. The vacancy of auditor can be filled by shareholders in consultation of central government. No. Central government comes only for removal of auditor. The vacancy can be filled by board of directors in consultation of the C&AG. It's not government company. So what's the answer, guys? B is the answer. Are you getting it, guys? Okay. Next, the last one. AGM of New Limited could not be held within the prescribed time. Choose the correct statement. So if AGM is not held, company can postpone indefinitely. No. Company can apply to ROC for extension of how much, guys? Maximum 3 months. B. The board shall appoint Verma and Associates if they agree to withdraw their resignation and conduct AGM by 31st Jan. Nothing like that. The company must approach NFRA. Nothing like that. So what is the answer, guys? B. At any case, the maximum extension is 3 months. If you don't conduct in 3 months, what will happen? Punishment. That's it. Okay. Section 99, penalty for not keeping AGM. Last question. If New Limited wants to shift registered office, that only we should expect that they didn't ask question. If they want to shift, which of the following is required? This is state to state, guys. Why they are giving Mumbai, Bangalore? Because some people will not know where is what to say. That state they may not know. Board approval only are no. Only shadow approval no. Approval from regional director along with the copy is needed. No. What is the answer, guys? C. For this question, you don't have to read the paragraph itself. So which all questions here we don't need paragraph? This last one we don't need paragraph. This one not require actually extension. This also casual vacancy not required. These two alone you will require because we want to know who are the common partners. That's it. For every question I am giving the concept over here, guys. This is an easy question, but if you want section number reference 96, this one, this is section 140 resignation. I am giving the answer also over there, guys. Are you following? Okay, that is the extra thing. With this we are done with the first case study. Let's start case scenario 6. Again mock test paper May 25. General Clause Act is what I call as GCO. Greenwood Limited. Okay, Greenwood Limited is established as an integrated organic food processing facility in Kerala. On 15th Jan 2024, Central Food issued a comprehensive notification containing following requirements. All new food processing must employ some quality assurance. Okay, managing director of the company is authorized to appoint something, and the appointment letter to be issued within 30 days from date of selection. The QAO must obtain mandatory certification from Food Safety Regulatory Board within 21 days from appointment. The facility must install some equipment by 1st March. Monthly compliance report must be submitted from 1st to 7th of fine. Some dates are given. Let me not go in detail into it. Based on the questions we will go there. On 10th Feb 2024, while implementing these requirements, GWO faced some situations. A selected AQO candidate was found submitting forced experience certificate. Another fellow failed to maintain safety protocols leading to minor contamination in the food. On 21st day of certification on QA fell on 29th Feb when the certification office was closed for local holiday followed by weekend. GCA I can connect. Generally what they are saying, if certification fell on a particular day, if it was closed, then it becomes the next working day as per GCA. Only in Negotiable Instrument Act we will see previous day, next day. In General Clause Act, if the particular due date falls on a government holiday, whether it is planned or emergency, it is what day? It is not the next day, it is the next working day. That's why the question here has clearly mentioned followed by weekend. Weekend also leave. So next working day could be Monday. The contamination incident violated both Food Safety Act and State Public Health Act. On the basis of above fact, answer the following questions. Yes, thank you. Regarding managing director's authority over QAS, which power is available without explicit mention? Power to accept resignation, power to suspend but not dismiss, power to transfer between units, power to suspend and dismiss. For this you should learn GCA. You all would have skipped GCA. Let me go to GCA in our book. So General Clause Act, believe me guys, is one of the easiest act. If you have not studied, I have put a free marathon on YouTube for GCA for just 1.5 to 2 hours. Watch that, Whole chapter you can revise, very easy, believe me. Here we are talking about powers and functionaries. Power to appoint includes power to suspend. Simple example, let's say I am taking Charan and appointing him as the class leader of this class. Can I dismiss him? That's all. That's what they're saying. The authority having the power to appoint should also have the power to dismiss. That's it. Come back to the question. So answer is power to suspend and dismiss. Are you following, guys? If you can appoint, you can also dismiss. Next. QA selected, the quality selected on 25th Jan. What is the last date for issuing appointment letter? We have to compute. For this, go to GCA again. What is GCA saying? Computation of time. If I go to computation of time, okay, they are saying you need to exclude what wordings is used here. Let me go here above. Within 30 days. This is the main provision. Follow, guys. Look at this. The managing director of the company is authorized to appoint some quality fellows with appointment letter to be issued within 30 days. The word is from selection. The word is from selection. Now, I'll teach you the provision here. Dividend has to be declared within 30 days from the date of declaration. So, for dividend, I will tell from the date of declaration, let's say from 7th August, within 30 days if you are counting. Do you count 7th August? No. Correct? For notice, 21 days from the date of dispatch. Do you count the date? You will start counting only from. That's what even our friend GCA is saying. What is GCA saying, guys? In simple terms, when the word from is used, you have to exclude the from that day. Are you following, guys? So over here, from means that day should be excluded. So come down. When is the appointment happening, guys? Come down to questions. Okay, they're asking deadline. Okay, here itself. If QAO is selected on 25th of Jan, what is the last date for issuing appointment letter? I just have to count 30 days. Be very careful without counting 25th Jan. So from 26th Jan, I have to count 30 days. Correct? In Jan, how many days are still left? 26, 27, 28, 29, 30, 31. 6 days are gone. So if 6 days are gone in Jan, in Feb more, how many days are there? 24 days. Therefore, I will go with what date? 24th Feb. Correct answer. Are you understanding? See, it's not about seeing the answer here, guys. In the next version of the material, I will remove it. In fact, I have told the team now itself, if possible, by today evening, they will send it to me. Okay. Now, are you all with me, guys? How to count? Are you understanding provision? Next. I want loud answers. Guys. Understanding, guys? Hello. If you guys are loud, online students can hear you. Okay. Next. Regarding the contamination incident violating the two acts, what is the correct legal position? Simple. Let's take Charan. Okay. Charan did a pickpocket. Okay. This is one town of Vijayawada. This area. Governor Pet. Okay. For recording students, it's just a location, guys. Governor Pet, Vijayawada. We are here now. Charan did pickpocket. Okay. So they arrested him and put him in the Governor Pet police station. Okay. So he got nice beatings, all that gift he got from police station, and they released him tomorrow. Charan, where is your house? Where do you stay? Which area? Tenali. Okay, fine, super. Now Charan is going back to Tenali after being released from police station. Again in Tenali, online recording students, Tenali is another location which is a 1 hour travel from here. Okay. Now, so in Tenali also, can the police station come? Police catch Charan. Hey, you did pickpocket. I saw in newspaper yesterday. Again, can they catch him, arrest him, give him nicely, guys? No. If you make a mistake, you should punish them only. So in life also, if your friends are making any mistake, punish them once. Don't punish them for the rest of the life. Learn to forgive. That is what General Clause Act is saying. Okay. So General Clause Act says provision as to punishable under 2 or more enactments. Whichever book you are saying, you can, what they are saying, you cannot, when two offenses are identical, you cannot punish them twice. So here contamination under 2 acts. Now the question comes, sir, what if there is punishment under 2 acts? For example, if I am doing insider trading, Companies Act also has punishment, SEBI Act also has punishment. What to do? The court can choose any one. Here also if there are 2 acts, what we should do? Choose under any one. Look at this. Only major violation? No. Only Food Safety Act? No. Both act must be independently enforced? No. What's the answer? Company can be prosecuted under either or both, but punished only once. Answer should be C. See, I can file a case under both the acts. On Charan, FIR can be registered only in Tenali or what is the area? Governor Pit, only here. Okay. Only one place he can be punished, but you can register case in both the places and then transfer it. So answer is C. Clear up? Understood? In 9 minutes we have finished case scenario number 6. Yeah, let's start off with case 7. Kapoor Limited is a mid-sized listed manufacturing company incorporated in the year 2010 by R.D. Kapoor. Since it's listed company, one general knowledge I want to give you. Once you clear your inter, okay, wherever you're doing articleship, try your best to do audit of a listed company. It is an experience which I cannot explain. You have to experience it. Of course, there will be a lot of work, but if you get to do audit of one listed company, your articleship is complete. You will learn everything. Why people in Big 4 are getting ranks? Why they are saying more exposure? Because Big 4 does the audit of listed companies, but a lot of mid-sized firm also will do audit of listed companies. You have to find that kind of firm. So if you do audit of listed company, it's the whole experience. Okay. Kapoor has 2 sons, Vineet and Aditya. Both Aditya and Vineet are working as directors in Kapoor Limited. Kapoor had some compliance issues in the past, some issues. In 1617, the company issued redeemable preference shares but later failed to pay dividends for some time. Issuing preference shares, section 55. Okay. In September 2018, the company fixed this by clearing all the loans and paying the pending dividends to the preference shareholders. So be careful of the dates, guys. When they had a failure, 2016-17, they had the issue. In September 2018, company fixed it. Immediately they fixed it. Okay. In a year. Now the company, after resolving this issue, company went for issuing shares with differential voting rates. Differential voting rates is section 43, rule 4. I will talk section numbers because I know section numbers. Those who know them will follow it. Those who don't know, leave it. Okay. Why I am using section numbers? Students who have come to my class know those numbers, so they can connect with it. Otherwise, leave it. Don't take the stress of not being able to connect with the numbers. It's totally fine. Okay. Let's proceed. As part of its broader capital raising strategy, the board of directors decided to issue 3 differential securities. A rights issue of equity share to existing shareholders, a new class of preference shares offered exclusively to current equity shareholders, a public issue of convertible debentures. What is this? Rights issue, section 62. A new class of preference shares offered exclusively to current equity shareholders. This will come under section 42. Sorry. This will come under what, guys? Could be private placement because only to specific existing class, or it can also be again 62. 62 is not rights issue. The actual name of 62 is issuing shares to further issue of shares to existing shareholders. Okay. And public issue of convertible debentures, section 71, debentures. So apart from differential voting rights, we are doing all these things. In India, do we have differential voting rights? No. Provision is there, SEBI doesn't allow it. Only one company in India actually has differential voting rights, Tata Motors. But in the rest of the world, Facebook, Meta, Tesla, Elon Musk, Amazon, Jeff Bezos, all these companies have differential voting rights. For example, if you take, what's this guy's name? Warren Buffett. In his company, Berkshire Hathaway, every share Warren Buffett has, one share has 10,000 votes. Every share you and me have, 10,000 shares have 1 vote. I'm not joking, that's the reality. When Jeff Bezos got divorced and he had to give a part of his property to his wife, now ex-wife, he gave a lot of shares to her without voting rights. He has the shares with voting rights. Family planning. Okay. Clear? Next. So for rights issue, it prepared a simplified document omitting several disclosures required under section 26(1). What is 26(1)? Here now, contents of prospectus. Okay. And for the new preference shares, they created a detailed prospectus but excluded certain financial reporting. For the convertible debentures, they prepare a complete prospectus with all the requirements. Pakka exam question. Nice question, guys. This is from September 25 RTP. Latest exam for us. Okay. Have you seen it yet? No, sir. Okay. So generally RTP questions are solid questions, guys. Difficult ones. Further, Roshini, a shareholder, owned 1,500 partly paid up shares in the company. Very good. 8 out of 10 paid. On 5th July, she applied to transfer 500 of these shares to Bakshi, who didn't know about it. The company sent him a notice on 10th July, which he received on 12th July. Since Mr. Bakshi was abroad, he saw the notice only on 20th July. After realizing the shares had unpaid amount, he sent an objection email on 24th July. However, the company went ahead with the transfer on 27th July. This is section 56, transfer and transmission, physical transfer of shares, transfer deed. When you send a transfer deed, the other party has the right to give objection if the shares are partly paid up. That concept. Okay. Saying his objection came too late. How many days should I wait for objection? 14 days. Section 56 says 14 days I have to wait for what, guys? Objection. Are you all with me, guys? Okay. I will show you the provision also. Okay. According to the company's rules, the board can approve the transfer of partly paid up shares if they believe the buyer can pay the remaining amount in the future. In other case, Varun, one of the shareholders of Kapoor Limited, is the legal representative of deceased shareholder Karthik. He had written an application to the company to transfer the shares of Mr. Karthik in his name. But Varun did not receive any reply from the company. Varun went to the company office to inquire about the same. Some general information. Question is still not done, guys. Company refused to transfer the shares in his name as he is not the registered member of the company. Here they are talking about transmission. The examiner also killed me, guys. Okay. For your information, the company's financial position on 31st March is as follows. Okay. Paid up share capital, free reserves, premium, loans, unsecured loan is given. The board wants to do a buyback. Excellent. Accounts in law. Buyback they are given. Want to purchase 3 crore shares at 60 per share. You have to apply all the 3 rules if needed. The company had previously conducted a buyback of 1 crore. 1 crore shares, 10 crores in August 2023. During the financial year 23-24, the new buyback is planned for October 2024. Why this date is given? When is the previous buyback? August 23. When is the current buyback? October 24. Buyback says maximum you can do only 1 buyback in a year, and after a buyback you should wait for 1 year before the next buyback. So 6 months. 6 months before next buyback. For that reason only they gave these dates, which falls in financial year 24-25. The CFO has confirmed that post buyback debt equity will be within prescribed limits and the shares are fully paid up. Answer the following questions. Welcome to MCQ discussion, guys. Finally we are seeing one good solid MCQ. We'll go to the questions. This I want you guys to try also. Since the default was made good in 1819, can the company do differential voting rights? So first question is 43 rule 4 regarding differential voting rights. Can they do it or no need to do it? Okay. Next, second question. I'm going to ask you to try all these, guys, as if it's main exam. Second, according to provisions of Companies Act, do you consider company's action affecting the transfer of partly paid up shares? Is it allowed or not allowed? Okay, section 56. Next. According to provisions of Companies Act, can the company deny transferring shares in Varun's name? And what is the company's obligation regarding transfer of shares? Okay, legal representative. Next. Buyback. Based on the buyback limitations, Do you think the proposed buyback is valid? You have to apply the limits. 4 questions. Oh, fifth also is there. The company had earlier made a buyback of 1 crore in August 23. Can it legally make another buyback? This you know the answer. Can they make another buyback? Yes, because the time is, company should not do. I'll give the time limit, guys. Look at this. Once buyback is over, in the next 6 months, you should not do a new issue is not allowed. Not buyback. New issue cannot be done. Only in the next 12 months, you should not do another buyback. Are you following, guys? What is the logic for this? Next 6 months, no new issue. In new issue, what will happen? Capital will come in now. Hey, just now you repaid capital minus, again you want plus. Are you a fool? Just now you repaid, again you are raising capital. That's why next 6 months you are not supposed to do a new issue for the 3 exceptions. What are the 3 exceptions for that? ESOP, bonus, convertible preference shares or debentures. Can someone tell me logic? I know it's not a concept class, it's MCQ class, but since it's a relevant provision, can someone tell me logic? Why in the next 6 months new issue is not allowed, but these 3 are allowed? Perfect. Who answered that? Name. Jagadish. Everyone clap for Jagadish, including online students. Okay. Why in these 3 cases we are not getting money? In ESOP, we are giving shares for employees at discount. Bonus, free conversion, reserves capital. Conversion, no capital. So because money is not coming in, you can do it. Are you following? Next 12 months, buyback not allowed. Now come back to MCQ. Answer over here. Can it legally conduct another buyback, guys, in up to 24? Answer is yes, as the gap is more than 1 year. Answer should be A, guys. Answer is A. Are you following, guys? Clear? Understanding? Let me answer other questions also. Only the main buyback question I want you to do it. Now, this question, sorry, first question. Okay. Can the company go for differential voting rights due to default? Take a minute, try it out. Recording also, try it, and then I will discuss. So I hope you have tried by yourself, all recording students. The answer is D, because company is ineligible to issue shares as they will wait for 5 years. Now I want to teach you a very important concept. I am very glad the ICA has finally discussed this concept after so long. Whichever class you have gone, 90% your faculty would not have taught you this. In fact, in my regular class also, I don't discuss this much. This is the first time I'm discussing this for anybody on YouTube or here, guys. Okay. In section 43, rule 4, guys, there is a default. Last 3 years, last 5 years. In last 3 years, there is 2 things. In last 5 years, there is 1 thing. In last 5 years, what all is given? Company should not have defaulted in repayment of preference shares or buyback or loans or dividend or interest or transfer to IEPF and a lot more. Are you following? Remember this, section 43 rule 4 says company should not have defaulted in all these for last 5 years. In last 3 years, we have 2 things. Company should not have defaulted in filing financial statement under section 137 or filing annual return under section 92, and they should not have defaulted in SEBI, SCRA, RBI and FEMA. Correct? These 3 are there. Are you all with me, guys? Do you remember learning this? I am not here to teach you 43 rule 4. If you want that, go read the concept marathon, all of that. Here MCQ, relevant provisions. Do you remember these 3? Now my question, this last 3 years and last 5 years, which is financial year, which is normal 3 years? Are you following, guys? Meaning, let me give an example. Let me give a beautiful example how you have to learn law. Imagine 14th August 2025, company has done a default. Company has done a default. Can I go for differential voting right issue on 16th August 2025? Are you following? What default, sir? I have defaulted in filing financial statements. On which day? 14th August. On 16th August, can I proceed? Yes or no? You will say no, because there should be no default in last 3 years. Here, follow very carefully. This one, you have to check last 3 financial years. Are you following, guys? This one also, you have to check last 3 financial years. This one, you have to check last 3 years from the date of issue. Are you understanding? I'll explain logic also. I just don't want you to mug up, guys. It's a beautiful logic. Imagine on 16th August 2025, company has a penalty in SEBI. The SEBI penalty came on. Same example. 14th August 25. Can the company proceed for, sorry, not a SEBI penalty came on this day. Can the company proceed? No. Because I have to check 3 years from 16th August. Are you following, guys? That is for this point. Because it's a penalty. Penalty can come on any damn day. Are you getting it, guys? Now, if it is financial statement or annual return, I will check only last 3 financial years, because filing the default only happens financial year. That means if you are going for 16th August issue, for this, you have to check the 3 financial years. I am in 25, yeah. That means I am in 25, 26. Correct? So I have to check what 3 financial years? 24, 25, 23, 24, 22, 23. Are you getting it, guys? Are you able to appreciate the difference? Okay. And even for this interest and all these, I have to check only 3 financial years and not 3 years. Sir, why, sir? Because interest, preference shares, all of these are treated on accrual basis. You generally find outstanding on 31st March. Are you getting it, guys? Very, very important. I am very glad ICA finally tested this in the latest RTP, guys. That is why in the question, I don't know if you noticed also, they told what? Look at this. In the default, they would have indirectly spoken about financial year. Where is it, guys? First paragraph, huh? Look at this. Company proposed to issue for the financial year 1920. The issue is there in financial year 1617. Now this is talking about which issue over here? This is talking about this one, correct? So this one means I have to check only financial year. That's why you come to option, come down to the option, and that's why they are saying company is ineligible to issue. They have to wait for 5 years till this year, till 2024 March, because issue happened in which year? Issue happened in, default happened in 1617 now. So from 1617, 5 financial years will end on which day? 31st March 2024. No. You have to find 5 years from the day on which default comes to an end. When the rectification is happening, where is it, guys? September 2018 now. Even if it takes time, it's okay, guys. September 2018 falls in financial year 18, 19. That means you have to wait for 5 years. 1920, 2021, 21, 22, 22, 23, 23, 24. These are those 5 years. That's why 31st March 24. Are you getting it? Are you actually getting the computation, guys? Are you understanding? It is not from September 2018, 5 years. If you do that, 5 more attempts. Are you following, guys? It is 5 years from end of this financial year. Clear? Are you actually appreciating this concept, guys? I don't know. I am excited. Are you all excited for this? How many of you knew this before? 3, 4. Wherever you guys studied, good job. Others, no comments. Fine. Next. Including me, now only I am discussing this, guys. Okay. Next question. This I told you, they have to reply within 14 days. Section 56 actually says reply within 2 weeks. Okay. So look at this. When did Bakshi give reply? He got the objection on 24th July. That fellow replied within 3 days on 27th. He replied within 3 days. So what the company did by transferring shares is not valid. Look at the answer. No, because Bakshi made objection within 2 weeks from date of receipt of notice. Therefore, company's action is not valid. Are you following, guys? They're testing the 2 weeks limit in section 56. Later, go to 56 in your book, read. If the 2 weeks is there, good book. 2 weeks is not there, throw that book. Next. According to the provisions of Companies Act, can the company deny transferring shares to Varun's name? What is the company's obligation? Now here, we have a concept called transfer and transmission. Only for transfer I need transfer deed. For transmission, by law, automatically shares are transferred. It's an automatic operation. So look at this. Yes, company can refuse. Since it's not registered shareholder, company cannot refuse. Company can deny if legal representative's name is not registered with the company. Company needs approval of tribunal. Nothing, guys. Like you can see the answer. The legal representative has the right to transfer even if they are not registered shareholder because it's death. In transmission, even if name is not there, we can transfer. Are you following, guys? That's there in section 56. This also we finished, no? Yeah, more than 1 year. Last question. How much buyback can be done? No need to apply debt equity ratio test. We need to apply only first two tests, number of shares and resource test. Let us solve it, guys. It's like doing an account sum. Correct? You're expert in that, guys. By the time you come to law, accounts exam is over. You would have gotten that 6 marks in buyback also. Correct? Number of shares, first test, 2 crore shares, 20 crores is there. So test 1, 20 crores into how much, guys? 25%. How much? With calculator or without calculator you will get 5 crores. Do you need calci for this? Come on, guys. 5 crores number of shares I can buy back. So 5 crores number of shares. Have they given the buyback price? Where they give you 60 rupees per share. So 5 crores into 60 is how much? 300 crores. Again, do we need calculator? 7th standard kid will do without calculator, guys. Your choice. Next for resource. Will I consider paid up shares? Yes. Will I consider free reserves? Yes. Will I consider SP? Yes. Secured loan, it comes only in debt equity ratio. Unsecured loan, debt equity ratio. So my total reserve is 200 plus 600 plus 150. How much? 950. In that resource, I will apply how much percentage? 25%. Assuming special resolution is passed. Anywhere they are given that? No, but let me go for maximum SR. So what is 950 crores and 25%? How much? For this you can use calci, guys. How much? 230.5 crores. Now this 237.5 crores divided by 60 rupees per share, how much you are getting? 3.95 crore shares. Generally we take whichever is satisfying all the 3. Correct? So which one we will take here? 3.95 is the maximum resource that I can use. Can I take 5 crores? No, because this is the maximum resource. Sir, what about debt equity? I want to apply it, but question is saying what? The debt equity is within the prescribed limits. So what I will do in exam, first I will go to options and check if there is 3.95. Is it there? How many buyback they want to do? Look at this case. Company wants to buy back how much? Look at this. 3 crores they want to buy back. So in our computation we are getting 3.95. Between these two tests I will take 3.95. So 3.95 is correct. Come here. Yes, the buyback is valid as the total amount 180 is within 25% of aggregate paid up share capital 800 crores, and the buyback is new financial year, not affected by previous year. Next, sorry, the buyback is valid as the number of shares 3 crores within the 25%. Buyback is valid as the value of shares being bought back 180 crores represents only 22.5% of the paid up share capital. No, the buyback is invalid. No, it's definitely not invalid. Correct? Now here all the answers look similar. So I have to start eliminating the wrong answers. How to do in exam? Definitely not option D. Correct? because it says buyback is invalid, but actually buyback is valid. First option, buyback is valid as the total amount 180 crores. How sir 180 crores? We want to buy back 3 crores huh? Into 60 per share, which is 180, is within the 25% of aggregate paid up share capital and free reserves. Is this the test? No, it is 25% divided by number of shares, correct? Or what is total amount here? Reserves 950 into 25%, 237 crores. What he is saying, 180 is within 237 crores, and the buyback in the new financial year is not affected by the previous year's buyback. Actually point is correct, but have we learnt anything like 25, the resource should be within this 237 crores? No, not there. So I will slightly cut this off, not because it's wrong, but it's not the full correct answer. Yes, buyback is valid as the number of shares 3 crores is within 25%. Yes, we computed that. Yes, the buyback is valid as the value of shares being bought back 180 crores represents only 22.5% of the aggregate. We can go up to 25%. Actually, if you ask me, A, B and C, all the three are correct. Yes sir, honestly all three are correct, but as per the provisions, which is mostly correct, like which is the wordings of provision, which is B. Are you getting it guys? Should I apply debt equity here? Not needed. No need to apply what guys? Debt equity, because question has told it's there. But shall we apply for practice? Can we try guys? I'll give you a shortcut for debt equity. What is the total debt here? 400 plus 300, 700. So my total debt will be 700. My total equity, we already found out how much guys? 950. So 700 by 950 is definitely less than 2. It's less than 1 actually. So how much can the equity reduce? 700 is the debt divided by 2, 350. That means equity can go up to 350, correct? See, only if my equity is 350, debt equity will be 2. So that means it can go up to 350. What is my actual debt now? 950 minus 350. Equity can drop by 600. Are you all with me guys? So the reduction in equity is 600. How do I find number of shares? Please don't apply simultaneous equation. I'm repeating, don't apply simultaneous equation. Are you all with me guys? Why? It's MCQ. Do you know the shortcut for this? How to find number of shares? One technique is there. Have you all understood till 600? What you should do after this to find number of shares? You take 600, divide by buyback price. How much? Plus 10. What is 10? Face value or nominal value you should transfer to CRR. 600 divided by 70 is how much? How much? 8.57 crores, correct? That means if I actually apply all the three tests, guys, then you will be getting, as per share outstanding test, you will get 5 crores. As per resource test, you will get 3.95. As per debt equity, you will get 8.57, which is the lowest. 3.95. I will go with that. I will challenge you, guarantee. Today I am not proving it here because we don't have time. For MCQ it's just shortcuts, but I will challenge you in main exam also for accounts and law for simultaneous equation. Once you find this 600, like debt equity, this is the current equity, desired equity, reduction is how much? 600. Blindly trust me on this. 600 divided by buyback price plus CRR transfer, you will get the answer. If you have time, you solve it by yourself, you will get the answer. Are you all with me? Understanding guys? Are you really understanding? Hello? Okay, that's about it. So with this, It took almost about 30 minutes for this one question. But are you clear, guys? So you can mark this as an LDR question or day before exam, a good case study to go through. All of you with me? Okay. So let's go to case scenario 8, guys, which is revision test paper RTP May 24. Golden Limited is a listed company which was incorporated in 2013, having its registered office in Delhi. Okay, good. Corporate office in Noida. Now, for the entire Companies Act, what is important for us? Registered office or corporate officer? Only the registered office is important. So I'll mark that as important, guys. Sorry, yeah. Next, it is registered with an authorized capital of 20 crores divided into 2 crore shares of 10. Paid up share capital is 10 crores, 1 crore shares of 10. That means authorized here is double of paid up share capital. Company is in construction activities like construction of buildings, roads, etc. Mostly all of you would have done this MCQ at some point. Okay, because this was the first MCQ released by ICA in RTP. For May 24 exams new syllabus, that is the first time case study came. So if any of the students wrote that exam, then they will be knowing this question, because that time everybody studied this MCQ. Anyway, on 8th Jan 2022, the company incorporated a wholly owned subsidiary, D Limited, which is involved in supplying of construction materials like steel, iron, cement, etc. D Limited elects to choose its FS from 8th Jan 2022 to 31st March 2022. What is D Limited? It's the subsidiary, correct? So what is the fact, sir, that so far we have seen? First we have this company called Golden, whose authorized share capital is 20 crores, paid up share capital is 1 crore, 1 into 10. This Golden has a D Limited subsidiary which is in the similar nature of business. Promise I am reading this question now only with you. Okay, all the questions I read with you guys. Okay, the way, if I am able to interpret it fast, you should also catch it same way. This D Limited's financial year is from Jan 22 to March 22. That means as per section number 129, they are following the option of a shorter financial year because the company is incorporated after 31st December. Are you following? They have a choice. Instead of March 22, they can also go for March 23, but they are not taking that choice. Okay. In practical scenario, which is better? Let's keep one as what they have done in question. Let's keep two as the other option. So if you are an auditor tomorrow, which you will choose? I'll give an analogy. If it is option 1, you will have 2 financial years, correct? Jan 22 to March 22 plus April 22 to March 23. That means you have how many financial years? 2 financial years, correct? Are you all with me, guys? But if it is the option like this, Jan 22 to March 23, directly I am taking 15 months, then I will have only 1 financial year. If I have 2 financial years, double audit, double fee, 2 times filing unreturned, 2 times filing FS, more money for me. If I take option 1, then everything will be only once. After that it will become common. So now you tell me, if you are the auditor, what will you advise to client? Because client doesn't know section 129, correct? He will incorporate on Jan 2022 and he will come to you, sir, what to do, sir? So what you decide only he knows. How many of you will go with, let's say, I'm going to give option A. Option A, okay. Or how many of you will go with 2 financial years option? So double income for me. How many of you will go with option 1? Sir, only 1 financial year, little income for me, but ethics I am learning. How many of you? Okay. Now, very simple. If I spend more time, most of you will take this option with 2 financial years, double income. But the ones taking this double financial year option will not progress forward in their practice. In few years, they will close the practice and go for job. The ones who have taken that 1 financial year by doing the good for the client, they will grow in practice. How, sir? Very simple. You think client is dumb? Huh? Today he may be dumb. Someday he will learn. Somebody will put real. I'll only put like this one option is there. Then the client will see that, okay, and be like, hey, stupid CA, what do you did? So what will happen if you take the first option with 2 financial years? If somebody is offering your client discount, he will run with them. What I will do, I will tell my client to go for 1 financial year, and I will advise him saying, see, I could have cheated you by doing 2 financial years, but I am having loss of income, but it's what to say, cost saving for you. For me, my income is not important, your money is important. Like this one emotional dialogue I will release, and I will tell him only 1 financial year. He will be forever with me. Tomorrow if somebody is giving even 50% discount, he will be with me only. Are you understanding, guys? Are you all genuine understanding? Oh? Hello? Fine. From paragraph we went somewhere. Sorry guys, let's get back. On 2nd Jan 2022, Golden Limited incorporated a wholly owned subsidiary, E Limited, for providing project management consultancy service to its customers to parent company. On 5th Jan, Golden Limited through its subsidiary E Limited acquired 100% partnership in XYZ. Fine, some other transactions. Partnership firm E Limited elects to choose to prepare first financial statement for the period 2nd Jan to 31st March and conduct an AGM on 16th August 2023. Fine. Similar, they are taking a shorter financial year, quickly finishing. What's happening in next paragraph? On 1st July 2022, the subsidiary D, which one? This D, incorporated a wholly owned subsidiary, F Limited. So now that has another subsidiary, correct? So let me erase all this other nonsense. Okay. Now this D, what is subsidiary called? F. F Limited 100% subsidiary. Golden is preparing standalone financial statement for the year 21-22 and presented before the Board of Directors on 25th August for their approval, and the same was adopted by shareholders in AGM. Okay. Golden Limited prepares its shareholder and consult for this year. Okay, fine. For their approval, it was held in AGM on 26th September. Fine. Some dates I didn't go in detail because exam. On the basis of above, answer the questions. First, what is the last date for conducting AGM for E Limited? Okay. So where is E Limited, guys? Go back to the question. Where is E Limited? Second paragraph here. Okay. E Limited for providing project management. E Limited acquired 100% partnership in XYZ partnership firm. E Limited elects to choose. Okay. 2nd Jan to 31st March 2023 and conducted its AGM on 16th August 2023. So what is the last day? So when is the financial year ending for them? 31st March 2023 only is given, huh? Yes, 2023. So as per section 96, AGM should be held within 6 months, which ends on 30th September 23. If you want extension, you can go for another 3 months, which is 31st December 23. This is for an existing company. But if it's a new company totally it will be 9 months. Again with same data, 31st December 23. Now come down to options. What will be the answer, guys? What is the answer? 2022, Jan 22 to March 23, conducted AGM on 16th August 2023. Question is for E Limited only, no? Yeah, E Limited is here. So answer is, yeah, correct. We have the answer. What we just computed, guys? 31st December 2023. Answer is there. Sorry, I didn't see that. 31st December 2023. Are you clear, guys? Easier. Come down. What is the last date for conducting AGM for Golden Limited for the year 31st March 2023? Again, now they are not asking you for extra 6 months. Here, E Limited is a new company, correct? That's why 31st December. How, sir? New company? Golden Limited in this year incorporated. Are you following? Here, Golden is an existing company. So for 31st March 2023, it will be what date, guys? 30th September 2023. Actually, so far for these two questions, no need to read the paragraph itself, but we are just going in a traditional way. As I keep going, subsequent questions I'll go shortcut. Okay. Next, the company provides an additional standalone financial statements. The company also prepare CFS. Okay. Accordingly, the consolidated financial statements of Golden Limited for the year ended 31st March 2022 includes financial statement of whom? Very good question. Come here. For Golden, who all I should include? I should include D Limited subsidiary. Should I also include F Limited subsidiary? Yes. So D and F. What about E? Look at this. On 2nd Jan, Golden incorporated a newly owned subsidiary E Limited. Are you following, guys? So I will also include E. So far I will include all the three companies, which is D, F, E Limited. Are you following, guys? All of you with me? What about the partnership firm? They gave a partnership firm. They also, this E Limited acquired 100% interest in XYZ & Co, which is a partnership firm. Consolidation is for companies, not for partnership firm. Are you all with me, guys? So I will consolidate whom all, guys? Golden Limited, D Limited, E Limited, XYZ. Okay, there is no option. So XYZ is a firm, sorry. These three, Golden, D. Okay, they are given answer as C. Will I consolidate partnership? Let me just cross check that once. Okay, Golden acquired through its subsidiary, E Limited acquired 100% partnership interest in XYZ & Co partnership firm. Okay, so the question is, do we consolidate partnership? Correct? Let me just check that one moment. So we have just checked, guys, online also. I am just clarifying this as per AS 21 consolidation. Okay, answer for this is not there in our law book. Okay, AS 21 consolidation says if an entity has control over another entity, then you will proceed and consolidate. Our general assumption so far is we will take only consolidation of companies, but based on this question and the word control says you should have more than half of voting power, not share capital, voting power. Here the question is saying 100% of partnership interest in XYZ & Co. That means I have full control of the partnership. So purely by applying the logic of consolidation, why are we doing consolidation first of all? Because that another entity, we are able to what? Yeah, I got the answer, guys. Very simple. Now, very simple. Accounting standards is applicable only for companies or even partnership. Even partnership. If you see applicability of accounting standards, we have something called level 1, level 2, level 3. Few things are there, correct? And accounting standards are supposed to be followed even by sole proprietor, LLP, partnership and company if they meet those particular limits. Because there they don't use the word body, they don't use the word company, they use the word what? Entity. So AS 21 is applicable for even partnership firms if they fall in that limit. Now because the company is controlling this entity 100%, we will proceed and consolidate. Are you following, guys? Okay. This is the first question I am also seeing, but we will go with the option. This is correct means it's correct. So as per AS 21, I just checked. I mean, I'm not showing in recording. Here also I just checked in my AS 21 note. Therefore, we will also include what, guys? Partnership. Now, what is the one company we are not including? F Limited. Where is F in the question? Okay. On first, the subsidiary company D incorporated a wholly owned subsidiary F Limited. Okay. On which day? F. So the subsidiary company D incorporated wholly owned subsidiary. So D is here. So D incorporated. Oh, this only is FA. Then which one is? That is on which day? Okay, and they are asking consolidation on which day? Okay, 31st March 2022. Okay, perfect. So follow, guys. Actually, F Limited also I have to consolidate. But since this is on 1st July, after the financial year, next year only I will consolidate. Therefore, the answer will be what, guys? C. If the same question is 31st March 2023, then you will take option as answer D. Are you all with me, guys? Following up? Sure. So for this question, you definitely have to read the paragraph, otherwise you will not be able to get it correctly, because whole paragraph is connected to this question. Next, see, that approach of reading answer works when you don't have time, but mostly at least one question you will have to read it. Okay. Next, the Companies Act provides that in addition to standalone financial statements, company should also prepare CFS, which shall be presented before AGM. Accordingly, the consolidation for 34. Okay, this only we discussed now, correct? For 31st March 2023, which one, guys? All. Just now we discussed. Do you understand, guys? Okay, perfect. Oh, one more is there. Please select what is the correct option. Okay. Had given the notice for holding. Okay. When have they planned? This is for AGM for which company? Golden Limited. So go above. When are they conducting AGM, guys? Golden Limited. Find it. I just want to highlight that part only. When are they keeping AGM? Okay. Conducted its AGM on 16th August 2023. Golden only, no? Oh, this is F Limited. Where is Golden's AGM? Here, yeah. This one, no? 2nd September, correct? Subsidy. Yeah. Golden Limited prepares its standalone FS for the year 21-22 and presented to the board on 25th August. Approval was adopted and shareholders in AGM on 2nd September. So if the AGM is on 2nd of September, if the AGM is okay, one more AGM, which one? Which one? 26th September, Golden Limited prepared its standalone consolidated financial statements for the year 22-23. That is next year's AGM, correct? This is next year. So the two relevant years for me is 2nd September 2022 is for previous year. 26th September 2023 is for the next year, correct? No? In the question they asked 2023. In the question, which one they are asking? For, yeah, everything is 2023. So I should not take 2nd September. You are right, guys. Very good. So you will be taking 26th September 2023. 26th September 2023. This is post-lunch effect for me. Okay. Now, so if this is the date of AGM, we need to send it. Notice when, guys? At least 21 days before. So I will not count 26. So 25 minus 21. What date, guys? Mumbai on 26th September. Okay, what are they saying here in the question first? So I don't think they're asking about notice. Which of the following here is correct? Golden Limited had given notice for holding AGM in Mumbai on 26th September. 26th September. 27th, no. 26th. So definitely C is not correct, because AGM is, it's not that day. Remaining 3 is 26th. Now where should they keep the AGM? Registered office. Registered office is what, guys? Delhi. So come down here. Good question, guys. Can it be Mumbai? No, so A is wrong. Sir, B is also Delhi. D is also Delhi. But why is the correct answer B? Timing. Excellent, those who got it. Here it is 11 a.m. We should keep between 9 to 6. 8:30 is not correct. Therefore, this is wrong. Are you following, guys? So when I read the question, I thought something about notice. So what is the lesson for us? Read the question fully. Then you start computing all notice. Are you following, guys? Clear? Understood? Done with case study 8. Okay, let's start off case scenario 9, guys. RTP May 24. OMX Software is a private limited company having its registered office in Bangalore and is a wholly owned subsidiary of OMX Software Incorporation situated in USA. So my Indian company is a subsidiary of a US holding. Mr. Rajat Kapoor, Mr. Shubham and Mr. Peter are directors of OMX Software Private Limited. In India, 3 directors. Rajat and Shubham are Indian residents while Peter is a non-resident and stays in USA. Fine. Peter is also a director in OMX Solutions, OMX Software Incorporation. Rajat left India on 2nd November 2021 for the purpose of looking after the business of OMX Incorporation. Rajat came back to India on 12th Feb 2022 to meet his family and left again on 26th Feb 2022 and left India and went back to US to look after the business of OMX Software. Rajat again visited on 25th August 2022, stays in India for the whole year. OMX has availed the consultancy service from a company situated in USA and developed whatever software for rendering service in India. Rajat had purchased a residential property in US on 27th April 2022, which was self-occupied by him for his residential use. So rightly said, it's a combination of FEMA, foreign company, LLP, nothing is there, but we will see in the question. Considering the provisions, they're asking residential status of Rajat Kapoor. For that, I have to draw the timeline first, otherwise it's going to be confusing. We will draw that. Next, considering provisions of Foreign Exchange Management Act, how much amount can be remitted outside India for the purpose of consultancy? For this, you have to remember the limit, guys. How much? How much, guys? 1 lakh or 10 lakh dollars? We will see that in the book itself. Let me straight away go here. If I go to FEMA, yeah, so if I go to FEMA Act, look at this. For consultancy, okay, what they are saying, it is going to be 10 lakhs if it is for infrastructure and 1 lakh, correct? Not 1 lakh. 1 crore and 10 crores, correct? In US dollars. So it's going to be 10 crores US dollars and it's going to be 1 crore US dollars. So if it is for infrastructure, it will be how much, guys? 10 crores USD. If it's for anything else, it's going to be 1 crore US dollars. This is for what purpose? Rendering service. So the answer will be how much, guys? 1 crore. Can you see it here, guys? Hello, are you all with me? Hello? 1 crore. Okay, answer is A. Next, let me finish the easy ones first. Considering the provisions of FEMA in respect of purchase of residential property by Rajat in USA, which of the following is correct? Again, I want to know residential status to know this. Next, filing of partners change of address, some concept. Bhavesh, Yash and Chirag. Okay, they're asking some other question within this case. Incorporated an LLP partner, LLP for doing the business of trading in timber under the name of Solid Lakkal LLP, whatever. Chirag has shifted his residence from Kamalanagar, Agra, 2023. Chirag had informed the firm about the change of his address on 20th November without sending return notice. By which date should LLP inform the ROC? Within how many days, guys? I told you LLP means if you don't know time limit, within 30 days. Within 30 days of what? From when he informed firm. He informed firm on 20th November. So from 20th November, when will 30 days get over, guys? How much? So on 16th November is when, okay, He has shifted on 16th November. So 16th November is when he shifted. Let me go to LLP Act now. Our notes here, if I take it in shifting, yeah, here we go. Section 25, registration of change in partners. Look at this. Partner can change his name or address. He has to intimate LLP within. Okay. And LLP has to intimate registrar within 30 days in prescribed form. Are you following, guys? Okay. So how can LLP intimate registrar? They can intimate only once you intimate the LLP. So over here, if you see, he shifted on which day? 16th November 2023. It went to LLP only on 20th November 2023. Now the question comes for me is it 30 days from the date of shifting to ROCR, or is it 30 days from the date on which LLP is aware of the SEMA? What is the answer, guys? From which date? Is it 6? How many of you 16? How many of you 20th November? Quickly check the answer at your end once. Try it out, check it, guys. So we were a little bit confused over here, guys. So we are going to the LLP Act section 25, like I said. And if you read this point 2b over here, where there is any, this one, okay, the second point, where there is any change in the name or address of a partner, file a notice with the registrar within 30 days of such change. That means I have to file it from this one, from 16th November within 30 days to ROC. Therefore it will become what date? 16 December 23. Clear, guys? So it is not this 15 plus 30. It's not 45. This 15 will be separate, and then this 30 will be separate. I have to intimate firm within 15 days, intimate ROC within 30 days. Next question. Add-on question over here. Druk Software Company, a company incorporated in Australia, proposes to establish a place of business at Mumbai. The list of directors include Arun, MD, Ranveer, Director, Ramesh, Director, Nawaz, Director, and Lavina has been appointed as the Secretary of Druk Software Company. It has been noted that Ramesh, Malik and Nawaz, resident in India, are the persons who have been authorized to accept on behalf of the company service of process notice. Authorized person under section 380 of the Companies Act to be served on Druk Software. In relation to the company establishment, you are required to enlighten Druk Company Incorporation with respect to whose a declaration will be required to be submitted to ROC by Druk for not being convicted or debarred from formation of a company in or outside India. This is foreign company. If I go to foreign company provisions, yeah, if we go to foreign company, guys, in section 380 of foreign company, it says, look at this. In 380 of the material, declaration, documents to be delivered to registrar by foreign companies, declaration that none of the directors or authorized agents have been convicted or debarred from forming a company in India. That means everybody should give a declaration. Therefore, answer is D. Arun, Ranveer, Ramesh and Nawaz. Everybody. Sir, what about Lavina? Lavina is a secretary and not the director. Therefore, all the directors, look at this. Every director. Arun, managing director. Ranveer, this director, and Nawaz. So these four people should give a declaration. Clear? Are you following 380? Okay. So one last question we have here. This, yeah, regarding the residential status. I want you to try and draw the timeline by yourself so we can close this question. So what I have done, whatever is given in this particular paragraph, I have documented it here in terms of timeline. That's what is easy for to analyze. First, he left on 2nd November 2021. He left India for the purpose of business. That means he will be treated on this day as PROI, person resident outside India, because he is leaving for the purpose of business. Again on, so that means this entire period he will be PROI. He came back on 12th Feb for a family need, for some family need, and immediately he left on 26th Feb. So if somebody is coming into India for other than those three reasons, only if they are coming for those three reasons, we will take them as PR. II. Now he is coming for what purpose? Some other reason, and again he is leaving on this day for the purpose of business. Therefore, this entire period will be what, guys? PROI. Again he is coming back to India only on 25th August 2022. So until he comes back also it will be PROI. And after he comes back, he is staying till the end of the year, which is 31st March 2023, and that period they have not given why he has come. It looks like he has come for an uncertain period. Are you following, guys? Now what is the question asking, sir? Question is asking, considering the provisions of FEMA, which of the following options correctly determines the residential status of Rajat Kapoor? Rajat Kapoor should be treated as resident for financial year 22-23. First, let me write down the financial years, guys. Okay. This is 21. So, I have three financial years here. First, 21-22. And I have 22 and 23. Correct. So, for 21 and 22, which is basically in which timeline? Let me draw that. 21 starts somewhere here. No, not here. Before itself, correct. Before that, they have not given me any details, correct? That means he is leaving India only on 2nd of November. That means that day he is definitely for PROI, and 22 ends when? Somewhere here, correct? Yes or no, guys? 26th March 22. So this entire period he is a PROI. Clear, guys? And once he is back, let me just change the color from here till the rest of the year. It's again a split till the year ending. So till here, till 25th August, till this period he will be a PR. And after this we have to analyze. That means for 21-22 I can take him as what, guys? PROI. Come down over here. Rajat Kapoor will be treated as resident for the year 22-23 and 23-24, since he stayed in India for more than 182 days. Keep this as one option. Rajat Kapoor treated as non-resident for 22-23, which is 22-23. This year they are taking him as a PROI. Sorry. Since he left India for the purpose of carrying on business of OMX and resident for 23-24. Now for 22-23 also, significant part of the year he is outside India for the purpose of business. Now very simple question. For 22-23, you have to check the previous financial year, correct? Now previous financial year, whatever I have highlighted in the green, this entire period he is a PR. He is continuing as a PROI. Now he came back to India on 25th of August. For what purpose? They haven't defined. And his stay is uncertain. So from 25th August, I will take him as a PRII till the year ending. Okay. Next question. Rajat treated as non-resident for 22-23 and 23-24. Not correct, because for the year 23-24, the next year, for 23-24, he is fully in India. See, after this year, he is fully in India, guys. Now I have to check the previous year. Look at this. Let me show for each financial year. 21, 22, 22, 23, 23, 24. Let me break it down for you guys. For 23, 24, I will check the previous financial year. This 23, 24, 100% he is fully in India. No other details is available. But I will check the previous year. In previous year, my cutoff is 25th August. So, if it is 25th August, 25th August he came back and he became a PR. And after 25th August till 31st March 23, from 21st August to 25th August 2022, he is a PRIA, which is more than 182 days. Are you getting it, guys? Because 25th August means from September 1st till 31st March he is in India. That means in 22-23 for more than 182 days he is in India. So he becomes a PRIA for 23-24. That means I can comfortably conclude that 23-24 our friend is a PRIA. That is enough for me to eliminate option C, because here they are saying it's a non-resident for 23-24, which is not correct. Clear? Go for fourth option. Rajat to be treated as a resident for 22-23 since he stays in India for more than 182 days, and non-resident for 23-24. Just now I proved 23-24 is a PR. Therefore I will also strike option D. Understood? By using 23-24 as base, I have striked out 2 years. Now I still have A and B. Can you tell me how to cancel out which is wrong here? Rajat Kapoor to be treated as resident for the financial year 22-23. Come down over here. For the year 22-23, come here. We have the entire year 22-23 with us. Hello? Here 22-23. Middle of the year only, he is coming back to India. PRIA. I hope you are able to follow the diagram. Now for the year 22-23, you have to check which year. Previous. I have to check the previous year. In the previous year 21-22, look at this. In previous year 21-22, significantly he is a PR. OI. And before second, I'm checking for 21-22. Yeah. And before this date, we don't know what information, but he has left for the purpose of business and is coming back only mid-year. Therefore, I will say 22-23 also, he will be what, guys? Non-resident, correct? That's why I'll go with option B. Rajat Kapoor treated as non-resident for 22-23 since he left India for the purpose of carrying on business, and resident for 23-24 because he came back for more than 182 days. Let me summarize. Maybe some of you are confused. Okay. I will just summarize again. 21-22, 22-23, 23-24. Quick summary. For this year, he is a PRIA because in the previous year, he stayed for more than 182. For this year, he is a PROI because in this year, he left India for the purpose of business. The minute they leave for the purpose of business, you will not check the what condition? 182 days condition. Are you following, guys? That's it. So this is PROI, this is PRIA. This one I don't know because what is there in the previous year. In the question also they have not spoken about 21-22. Are you all with me, guys? How many of you genuinely not understanding still? Oh, all of you understood. Sure, but your face didn't give me that message. Sure, you understood? Your name? Bhavana, surely understood. Fine. So 1 is done. Let me finish off. 1 is done. 2 is done. 3 is left. Considering the provisions of FEMA in respect of purchase of residential property by Rajat in USA, which is correct. Now, when did Rajat purchase in USA? Look at the date. Purchased on 27th April 2022. Now on 27th April 2022, as per our diagram, yeah, it comes here. 27th April 2022. That day he is a PR. OI. So he is buying something when he is a PROI. Therefore, what will be the answer, guys? Simple. You are going to US to work in Google. You got 1 crore salary. When you are a PROI, whatever you do with your money, RBI cannot question you. Clear? Now Bill Gates is PROI or PRII? PROI. Whatever he is doing, I have no botheration. Clear? So purchase of property is current account transaction or no? Rajat has to sell his property before returning to India permanently as he becomes resident. No. What asset you owned abroad, you can do whatever you want with it abroad, guys. Purchase of residential property by Rajat is neither capital nor current account. Yes. When will it come in current account or capital account? If it's a transaction for PRII, for PROI, we don't see current and capital account. Purchase of residential property by Rajat is a capital account transaction. Yes, it becomes a capital account transaction if he is a PRII. So answer is going to be C. Are you following, guys? Clear? See, FEMA is one area where they can ask tricky questions in MCQ. Okay. So we have to be more careful there. Clear? We have understood till case 9. Okay. Let's start off. Case scenario 11, RTP September 24. Is it necessary to practice so many MCQs? Very simple. Any skill in life, the more you practice, you become good at it. Correct? For example, who can make breakfast idli dosa better? You or your parents' mom? Home parents. Why? Because they are used to doing it for years together. Who can solve a consolidation sum better? You. So same way for MCQ also, the more you practice, the control will come for you. And MCQ is not only in inter, even in final, guys. So Greenfield LLP and Blue Wave were through thriving business. What's the meaning of thriving? What is thriving, guys? Thriving means growing, booming business. Like they are growing rapidly, significantly. First batch 100 students, next batch 500, then 2000 students. Up, everyone is coming there. Okay. Thriving business in the renewable energy sector. Okay. Greenfield is in solar panel manufacturing, while Blue Wave is for wind turbine. So both are renewable energy, solar and wind energy. The future also is going to revolve around this only, really, not just for MCQ. Both the companies saw a strategic opportunity to join forces and create a more comprehensive energy to become like a monopoly. Okay. They decided to merge into a single entity called EcoFuture LLP. Can LLPs amalgamate and become one company? Yes. Amalgamation of LLP, part of our syllabus. For this merger, the management of both the companies proposed a scheme of compromise and arrangement under section 60 of LLP, part of our syllabus. They approached the tribunal to sanction the scheme involving transferring all assets and liabilities of both the companies to new company. You are experts in amalgamation. Let me proceed. The tribunal reviewed the proposal and found that the merger was designed for the reconstruction and amalgamation of Greenfield and Blue Wave. The tribunal gave order, sanctioning the scheme and setting forth several provisions for smooth transition. Fine. Nothing great. Some general facts. All assets and liabilities of Greenfield and Blue Wave are to be transferred to EcoFuture LLP. Any ongoing legal proceedings involving the both LLPs would continue under the new name EcoFuture. Correct? So all assets and liabilities will be transferred, amalgamation. Legal case will go to the new LLP. Pakka so far. Both these would be dissolved without needing for winding up. Okay, LLPs will go away, become new one. However, few new partners from Greenfield were not in favor of the merger. Here comes the problem. Of course, some people will never agree even if good things are happening. You will find them around you also. They dissented from compromise and arrangement. The tribunal provided specific directions to ensure their interests are addressed. After the order was made, both LLP has to file a certified copy to the tribunal order within 30 days. Unfortunately, due to some administrative delays, it got some. They found it late. They filed it late. What are the questions? Let me go to LLP Act once. Okay. And show you this compromise and arrangement. What do we have here? Yeah, in compromise and arrangement, the provision says basically between LLP and partners and amalgamation. Correct? Where is amalgamation? Yeah, reconstruction and Amalgamation. I'll just run through both these provisions of LLP also for a quick revision of this question. I'm yet to go to the MCQs. They may not be relevant also, but still. LLP can do compromise where 3/4 of the value agree for partners and creditors. Apply to tribunal with latest FS, details of pending investigation and material facts. And once you get the order, file to ROC within 30 days. This is compromise arrangement. Nothing great. Okay. Reconstruction or amalgamation. LLP plus LLP allowed. LLP with company not allowed. I am not saying this. Act is saying this. For any compromise, tribunal can pass amalgamation of LLP, intimate ROC within 30 days. Here they have not intimated in 30 days. Above also we saw if they don't intimate, there is going to be a penalty. Here also we will see same thing. Effect of order, all assets and liabilities will be transferred. Same thing happened here. All pending legal proceedings shall continue in the new company. Continued. Leads to dissolution of LLP without winding up. Same thing happened in the question. Exit opportunity to be given for dissenting parties. Some idiots who are not happy, give them exit opportunity. Order to be for smooth execution. That's it. Any default in this, if you have not filed to ROC, there is some penalty. That's all. Let's go to the questions. What is the main purpose of the scheme proposed between Greenfield and Blue Wave? What is the purpose, guys? Reconstruction, correct? Reconstruction and amalgamation of LLP. I am not saying this in question itself. Somewhere they would have given main purpose. Where they give? Where is it? Yeah, tribunal reviewed. Yeah. Here, second. Yeah, found it. Designed for the purpose of reconstruction and amalgamation. Next question. What authority does tribunal have when it sanctions a compromise or arrangement of section 60? It can only supervise. No, it has more power. It has no authority. Sorry, it has all the authority. It can supervise, modify and give directions. Yes, it can do that. It can dissolve the LLPs without any conditions. No, they will dissolve with conditions. So answer is C. Are you following, guys? Simple MCQs, nothing to do with act, more of common sense along with the act. Next. What penalty applies to LLP to comply with 30 days filing requirement? So if they didn't file within 30 days, what is the penalty? What to do in exam if this comes? Pray to God. Pick an option of our choice. Correct? Yes. Do you know the penalties, guys? Promise. I also don't know. I am also not going to learn, because for that 5 marks, how many penalties to learn? If I don't file within 30 days, let me go see, guys. LLP plus DP 10k, continuing offense 100 per day, maximum limit 1 lakh. Something like that is there here. What is the answer? A fine of 10,000 and additional penalties for continuing contravention. Can I see 10k here? 10k is there. LLP and DP 10,000 rupees. Here also 10,000 rupees. Do I know the answer? Promise I don't know, guys. I am seeing and answering just like you. So exam, if it comes also, use some common sense and choose something. Now I'll ask you one more penalty. For foreign company, what's the penalty? If they don't, a foreign company, if they come to India, they have to, what to say, register themselves in Indian Companies Act. If they don't register, there is an offense. Okay, I will give an option. If they don't register, for every day of offense, now my MCQ, for a foreign company, if they come to India and if they do not register under section 380, I am giving 4 options of penalty. Since anyway you never studied, make a guess. 500 rupees per day, 5,000 rupees per day, everything is per day, 50k per day, 5 lakhs per day. Answer. How much? All of you are going with 5,000. Wrong answer. 500 per day. Wrong answer. For foreign company, if they don't follow the Companies Act, it is, I am not joking, 50k per day. Foreign company, no, dollars they have. Correct? So I will show you that also. In foreign company, let us go to section 392. So this provision, if I am setting the paper, I will ask. Because anyway you will skip this, I will get the marks. Look at this. Section 392, penalty for contravention. Full India except rank holders, everybody will skip this. So we all fall in that category, guys. And we will make a guess. Penalty means 5,000 per day or 500 per day. But for foreign company, continuing offense, 50k per day. Why? Dollars. Correct? Are you following, guys? So like this, unique penalties you can focus and remember. If you are lucky, it will come. With this, we are done with case study number 11 is done again in just 9 minutes. Fine, let's go to case 12. Everybody who's watching here and recording, please don't watch me solve it. You should try and solve it by yourself. That's the whole idea. You have to try to be faster than me. Recording means if you want pause, answer by yourself, then check the answer with me. ABC was incorporated on 1st Jan. It operates in the manufacturing sector and aims to expand its business to e-commerce. Fine. ABC Limited's first financial year on 31st March 2024, and the board is preparing for its first AGM to present the financial statements and discuss the new business model. ABC Limited's current board consists of 5 directors, including 2 independent directors. Great. With the best corporate governance practices. Thank you. The company has a wholly owned subsidiary, XYZ Limited, which is primarily involved in research and development for new products. XYZ's financial year also on 31st March 2024. Additionally, ABC has a 30% stake in an associate company, MNO. So far, what is the summary, guys? So the summary so far is we have ABC, which has a subsidiary. Which one? XYZ, which is a 100% subsidiary, and this ABC also has a 30% stake in associate MNO. They have 30%. Are you following? That's it. So ABC is holding of one company, associate of another company. That's the summary of the first para. MNO provides logistics and distribution service. The board is assessing if it is required to prepare consolidated financial statements that combine the financials of ABC Limited. Are you all with me, guys? Okay. So combine ABC, XYZ and MNO Limited. Consider the exemptions available in the Companies Act. Considering the exemptions, what is the exemption in Companies Act? For 100% subsidiary, consolidation is not mandatory if you communicate the same in writing to the subsidiary. Yes or no, guys? Section 129. I'm repeating. For my 100% subsidiary, consolidation is not mandatory if you communicate to your subsidiary in writing and all of them agree. Unanimous resolution is passed. Okay. The AGM, approval of FSR, special resolution, consolidated financial statements, appointment of auditors and other general meeting proceedings. The board has provided notice to all members about AGM agenda, including proposal for special item requiring special resolution. This notice was sent by email, etc. Whatever. All shareholders, including minority stakeholders, receive this notice with proof of delivery available with the company. Okay, great. Come down. Given that ABC's first financial year, first, ended on 31st March, incorporated on 1st Jan 23. What is the last date, guys? Hello? 31st December 2024. 9 months. No need to read the question itself. Come down. Next. Suppose ABC holds its first AGM on 15th December 2024. First AGM. By when it must hold the subsequent AGM to remain compliant? Maximum time gap between two AGMs is. What are the 3 provisions, guys? AGM should be held within 6 months from end of financial year. Maximum time gap should not exceed 15 months and 1 AGM should be there in each. So tell me the answer for this. Can I go with 15 December? 1 year? No. Can I go with 30th September for next year? Hello, yes. Because if you don't, why 30th September is correct over here? Because for next year, the year would have ended on 31st March 25. So what is coming earlier? 6 months. Are you following, guys? That's my answer, B. Are you all getting it? It's a Dabba question, guys. Jujubi question. Are you understanding? Okay. Sure, didn't follow. Got confused. Didn't understand. Sure, 100%. I can believe you. Next, under the Companies Act 2013, does ABC need to prepare consolidated financial statements? Answer. Should it prepare CFS? Yes. Because it has a wholly owned subsidiary and an associate company. No is not the option. No is not the option. But no is no also can come. If shareholders provide a written consent exempting it from CFS preparation. Yes, because it's listed company, sir. No. C is not the option. No, because it qualifies for exemption as wholly owned subsidiary. That's the answer. But better answer is what? D. Now the question is whether should I go with A or D? A or D? Let's check the answer. Answer is A. Can someone tell me why have they voted for A over D? These are the kind of MCQs we discuss, because most of you will be like, sir, shareholders are giving written consent, I can exempt from CFS. A is saying there is subsidiary and associate, you have to consolidate. How many of you are confused whether I should go with A or D? Answer is A, sir. Why A? Why is D wrong? Not about written consent taking time. Yes. Sorry? No, not like that. The answer is very simple. Actually, D is correct. Only if you have a subsidiary, it is exempt. Are you following, guys? Here, I have a subsidiary and an associate. So, still exemption is applicable for the subsidiary, not mandatory. But for associate, you have to do a. So, the minute associate is there, option A is a more stronger answer compared to option D. Are you following? Charan, are you understanding? Clear? All of you with me, guys? Hello? I hope recording also have understood. Let's go to next question. What must ABC ensure to pass the special resolution providing the adoption of new e-commerce business? What is it, guys? Look at the points. Resolution must have more than 50% in favor. No, that is ordinary. The resolution must be still a special in the notice, and votes in favor must be 3 times the votes against. Then notice they are saying you should mention special and 3 again. Resolution can be passed even if the votes exceed the votes favor exceed against without being still as special. No. So definitely it's not option A, not option C. Resolution must have a unanimous support from board of directors. Answer is no. What is the correct answer? B is the correct answer. That's about it. Are you all with me, guys? Last question here. Under which conditions would ABC be exempt from preparing CFS? Now your point will come. If ABC is a wholly owned subsidiary, all members agree in writing to the exemption and proof of delivery of this intimation is available. Keep in mind, if XYZ shareholders unanimously agree to waive off consolidation, XYZ is the holding, correct? No. ABC is the holding. So keep point 2 also. MNO's Limited's financials are not significant to ABC's. No. Irrelevant point is C, correct? They are talking about materiality, not important. If ABC Limited's board decides to skip CFS with a simple majority vote, no. It's either A or B. Here A is the holding, correct? Is a wholly owned subsidiary. If ABC Limited is a wholly owned subsidiary, who's the holding? ABC. If ABC is a wholly owned subsidiary and all the members agree in writing for exemption and proof of delivery is intimation available. If XYZ Limited subsidiary shareholders unanimously agree, no. Who has to agree, guys? Holding company. If XYZ shareholders unanimously agree to waive off CFS requirement. Let's go quickly cross check in section 129. Yeah, in 129, look at this. This is the point in section 129 in the book also. Members of the wholly owned subsidiary or partly owned subsidiary, whether they are entitled to vote or otherwise, have been intimated in writing and they do not object the same. That means the holding is intimating the subsidiary and subsidiary is not objecting the same, and company should also maintain the proof of delivery. Correct? Now which is the answer, guys? What is the answer? A. Because if ABC is a wholly owned subsidiary, all members are agreeing in writing to the exemption. So I am communicating to them and they are agreeing in writing, and proof of delivery is the keyword. Over here, if XYZ shareholders unanimously agree, holding is unanimously or whoever is agreeing. But see, if XYZ is the subsidiary, unanimously agree. They don't have to unanimously agree. They should not object. Are you following, guys? And the word proof of delivery is missing. So I will go with option A. Are you all following, guys? So in 10 minutes we finished question number 12. Understood? All of you with me, guys? Super. Let's go to the next question, which is case scenario 18. ACC Private Limited was incorporated on July 2001. It is registered with an authorized capital of 20 crores, fine. Paid up share capital is 10 crores. Okay. The board of the company in the meeting held on 11th August board meeting declared interim dividend. So in the first 4 lines, the facts is authorized 20 crores, paid up share capital 10 crores, and declared interim dividend or whatever amount. The AGM of the company was held on 1st September. The company had incurred loss in the previous financial year as well as in the current financial year up to the period ending 30th June. What is 30th June? April, May, June. First quarter is a loss, and when am I declaring dividend? In the second quarter. See when I am declaring, guys. 11th August and approved on September. So July, August, September. That means I am declaring interim dividend in Q2 when Q1 is a loss. What is interim dividend provision saying? If there is a loss in the current year up to the preceding quarter, then the dividend shall be declared at a rate not higher than the average of last 3 years. Do you remember this, guys? So here I am coming down. This is for which year? 2023. So what is the last 3 years? Last year is nil, then 10 and 11%. So I should go to average of last 3 years. Now it's a good question to see if my last year is 0, not declared. Nil means not declared. How will this rule work out? Will I take average of last 3 years still, or will I take only average of 2 years? Or the rule is not applicable? So it's a question to discuss that. Good question from model test paper. Come down. The company has deposited the amount of dividend declared in a separate account on 14th of August. When is the dividend declared, guys? 11th August. So you have to deposit within 5 working days, which is 12, 13, 14, 15, 16. On or before 16th I have deposit. They deposit on 14th August, which is within the time. Out of the total dividend declared, rupees 60,000 payable to a few equity shareholders remains unchanged even after expiry of statutory period within which dividend was required to be paid and transferred to a separate bank account, unpaid dividend account on 30th of September. Sorry, 20th of September. The company prepares a statement containing names of shareholders, last known, all of that, and they are saying this is placed on the website. Next to case, meanwhile the company obtained term loan of 15 crores from Lakshmi Bank on 20th August, securing it with a charge on company's assets including its own buildings in India and Germany. Doesn't matter if the asset is in India or if it is outside India, I still have to create a charge. An intangible asset on the company's trademark and logo. Is it going to affect the charge creation? No. The asset can be tangible or intangible, secured or unsecured. Tangible or intangible, in India or outside India, movable or immovable, we will create the charge. According to Companies Act, the company was required to register the charge within specified time frame, 30 days. However, the company failed to complete the registration process within the prescribed timeline. Board has requested the company secretary to confirm them. Then they're saying CSR came 23-24. Last 3 years they gave the data. Is CSR applicable for this company, guys? Yes, because the turnover is more than 1000 crores. Excellent. On the basis of above facts and applying the above applicable provisions, choose the correct answer. First one, can the company create charge in favor of lender assets that are tangible or otherwise situated in India or Germany? So I told you tangible, intangible in India or outside India. Answer is C. Straightforward question because I revised the provision while reading the question. Next one, the maximum rate at which interim dividend can be declared by the company. What is the answer, guys? What is the answer? Is it preceding 2 financial years? No. See, we understood there is loss, so we have to take average. We have to take average. Is it average of last 2 financial years or average of 4 or average of 5? What is the answer? 3. We will go with B. That is the answer. Now come back over here. The question which I brought up. What is average of last 3 years? 0, 10, 11. Correct? 0 plus 10 plus 11 by 3. How much you are getting? 7 point. Okay, exactly you are getting 7. And the answer over here also is 7%. That means the conclusion is, if in any of the previous year dividend is not declared, it will be considered as 0. When I say average of last 3 years, I will take the average including the year where you didn't declare. If you didn't declare, 0 is also a number, no? Just because I didn't declare, I can't tell 2 years average. Or can I skip that year and go to one more year previous? No. See, simple. In 12th standard board exams, you wrote all exams. You got 95, 95, 90, 92. 5th exam or one exam, you didn't write. Can I say your average is 90%? No. That absent exam also will be taken. Hello, are you following, guys? Clear? Next. Simple. In respect of dividend declared, which is not correct. For this question, no need paragraph above. The company has transferred a dividend amount to separate bank account within 5 days from the end of declaration of. That's a correct statement. The company is required to pay dividend within. Correct statement. The company is required to transfer to unpaid dividend account to a separate bank account within 10 days. 10 days is not there anywhere in dividend chapter, so answer is C. Last one also 90 days, that website point. Clear? Easy one, guys. So one question which I feel it is important in this MCQ is the interim dividend average of 3 years when 1 year is 0. Next. Choose the correct option. CSR applicable? Yes, because AICC is having a turnover of more than. Answer is B. We already discussed. Are you following, guys? Last question. The notice of the AGM should be served by when? Quickly reverse compute, guys. When is the AGM conducted over here? AGM was conducted on 1st September. Don't look at the options. 1st September 2023. Everybody quickly compute, guys. Recording also. So collectively all of you have chosen. Recording also try. I am giving the answer what students told here. 10th August. Why 10th August they chose? 1st September we will not count. So 21 days in August. From 10th August it will come correctly. If I don't count 10th August, I have 31 days in August. Minus 10. You are left with 21 days. It should be 10th August. They sent in post or notice. Nothing is given regarding that. No, they have not given whether it's post or email. Come down. I will go with 10th August. Okay. But the answer is not 10th August because they would have considered 21 plus 48 hours of notice. So if I consider 48 hours of notice, then it has to be 8th August only, no? Why is it given as A here? 6th August. When is the AGM? The AGM was held on 1st September. Then this option is just wrong, guys. We will just change it. Option is, it has to be, if it is only 21 clear days, option will be D. If you are considering 48 days clear notice, then it will be C. 8th August. In no world, the option is going to be A. 6th. Are you following, guys? Understood? Leave the option. You got the answer correctly. Hello, all of you. Understood? With this, we are done with this question. Less than 10 minutes. Thank you. Let's do case scenario 53, which is an own question which I have just drafted using whatever thoughts I get. Okay. The grammar, I will put a rough draft and put into ChatGPT. ChatGPT takes care of the grammar, guys. But the concept is what I approve. India Cements, a listed company, holds 58% stake in the cricket franchise CSK. The remaining shares are held by Sri Sharada Logistics, 30%, EWS Finance and Investment, 12%. Are you following, guys? So how much CSK? 58% is India Cements, 30% some other company called Sharda, and 12% is EWS Finance. All put together, are we getting 100%? Yes. Now what they have said, MS Dhoni has been the captain of CSK since 2008 and continues to hold his position till 2026 as the captain. Though Dhoni is neither a shareholder nor a director in CSK. So in CSK, shareholding is with somebody else. Okay. He exercises significant influence over major decisions of the franchise, including appointment and removal of the board of directors. So no shareholding, but he has significant influence. Correct? AS 18 says, even if you don't have shareholding, if you take major decisions, then you will become a related party. Later, Sharda Logistics decided to exit by offering 30% stake via the offer for sale. So this 30% which is there, that company, which company, guys? Sharda has gone for offer for sale to sell to somebody else. CSK's board passed a resolution to vary the rights of shareholders, excluding Sharda's rights. Sharda does not consent to this variation. Section 48 is coming here. Variation of shareholders' rights. They want to change her rights. Subsequently, Dhoni acquires 10% shares in CSK from Sharda, finally getting 10%. At the time of incorporation, CSK's articles contained an entrenchment provision stating that appointment or removal of captain shall require an unanimous consent. Okay. Years later, maybe in 2040, CSK passes a resolution to remove Dhoni as captain. Okay. This is the facts, guys. Let's go to the questions. Based on the facts, can Dhoni be classified as a promoter under 2 subsection 16 of the Companies Act? Yes or no, guys? Who is a promoter? Promoter is someone who has, see, definition of promoter. If I go to prospectus chapter, initial chapter, if I go to prospectus, guys. Okay. Let me just show you 1 second. Where did that go? Yeah, found it. This is unit 2, correct? So if I go to prospectus chapter, here, definition of promoter, that's what we need. It came in exam many times. So definition of promoter, his name is mentioned in annual return or prospectus as promoter. Here is Dhoni's name mentioned? No. Control over the company either directly or indirectly. Control means shareholding. Here is he having a not really. Okay, in the initial stage. In accordance with whose directions or instruction the board is accustomed to act. This point is getting satisfied. In his instructions, board is acting. Therefore, yes, he exercises indirect control over the affairs of CSK. Clear? Next, can CSK vary the shareholders' rights of other shareholders excluding Sarada's, and will such variation be valid if she is not giving consent? For variation of shareholder rights, how much percentage we want? 70? 5% should agree. So here where is 75? Variation is invalid as consent of not less than 75% of the affected class including Sharda was not obtained. In variation they will always say what? If a particular class is being affected, you have to get 75% consent of that particular class. Are you understanding, guys? Okay. Next, are you able to answer a new question by yourself? Hello. CSK had an entrenchment clause at the time of incorporation for unanimous consent. Now, can they remove Dhoni through a special resolution? So, what they are saying, follow, guys. For removal of captain, you need unanimous resolution. But in this, Dhoni has 10%. That means without Dhoni's consent, you can't remove Dhoni. Correct? So this is the entrenchment provision. But what they are saying, can they do it through a special resolution? Can they remove the entrenchment provision? Answer. Answer, guys. Now, is this a private company or public company? Chennai Super Kings, they have not met. India Cements is a listed company. Cricket franchise, okay, I have not given private or public. So very simple. Understand, guys, if we will assume it to be a public company because holding is listed, so subsidiary will become, holding is listed public company, so subsidiary will become deemed public company. So if it's a deemed, correct, it becomes a deemed public company. Yes or no, guys? If holding is public listed, subsidiary becomes deemed public. So for public, the only way to remove a unanimous entrenchment is to pass a unanimous resolution. So answer is no. Since entrenchment requires unanimous, it overrides special resolution. The same question I am changing. If it's a private company, answer will become A. SR is sufficient. Are you following? Very simple. For a public company, the entrenchment provision can be removed by passing a unanimous resolution. For a private company, what is required? Special is sufficient. Let me show you an entrenchment, guys. Here we go. Look at this. The entrenchment provision, look at this, will be added at the time of incorporation of company, and later it can be altered. For private company, unanimous. Here it's a what? Private or public are not clear. If it's a public company, special resolution in the general meeting. Now here we have concluded, because it's a subsidiary of listed company, we are considering it as a deemed public company. If it's a deemed public company, then I can pass a SR and remove the entrenchment provision. If it's a private company, then the answer will be unanimous resolution. I think here we are going with the assumption of it is a private, private company. But if it's a deemed public, what is the question? Can now after several years remove Dhoni through a special resolution? See, you can't. No, answer is still the same. Answer is still B only, guys. Whether it's private or public, to remove Dhoni you need unanimous consent. To remove the entrenchment provision only, you need special. So if the question is altered to, can I remove the entrenchment provision? Yes, you can remove by passing a special. But to remove Dhoni, in both the cases, you need only unanimous. Are you all following? Understood? Clear? That's it. We're done with case 53. Yeah, let's start off with case 57. Satyam Computer Services, once fourth largest IT company, was founded in 1997 by Ramalinga Raju. Okay, I'm sure all of you know about Satyam scam, guys. Between 2003 and 2008, Satyam's books of accounts were systematically manipulated by overstating profits and showing inflated bank balances. By 2008, the fraud had crossed 7,000 crores in 2008, okay, with over 13,000 fictitious employees added to payroll and bogus salaries paid. What is Satyam scam? Not relevant for this MCQ, but quickly if I have to finish, okay, you may already know, but to put in the simplest way that you will understand, okay, this is my trading and P&L, this is my balance sheet. What these fellows did, they passed credit sale entry. What is the entry for credit sale, guys? Debtors to sales, correct? So I will write here by sales, let's say 100. Debtors will come here, how much, guys? Because of this, what will happen? Net profit will increase by 100, correct? But this sale never happened. There was no sale. It was a fake dummy sale. Like this, they passed the fake dummy sale, not one or two, to the extent of 7,000 crores, not in one transaction, over 5 to 6 years, daily 1 lakh, 2 lakhs, 400, 500, like that, small entries in a small gap, I mean a long gap, but multiple transactions, like how they said 13,000 entries, they passed 7,000 crores worth of fake sale entry, correct? If this happens, double impact will happen. First impact is my debtors will become 7,000 crores, correct? Someday it should become bank for 7,000 crores. But if it's fake sale, it won't happen, no. As an auditor, what you will do, I will check the bank statement, correct? That's what you have to check. Article, when you go, you will know. I will check the bank statement. The articles who went there for auditor, they did check the bank statement. Balance was there. But what Satyam did, they are a software company. Back in 2008, no ChatGPT, no Canva, nothing. They created fixed deposit certificate for 7,000 crores, which is fake. They created the fake, so they are saying that they have 7,000 crores balance with, for example, Punjab National Bank. But the balance was never there. I created fake certificate. Are you following, guys? Okay. What the article should have done, taken that copy of certificate to the bank branch, okay, and cross-checked if that balance is actually there. But they failed to do that, not for 1 year, but for many years. So because of this, the sale impact was shown in as if balance is there in bank when balance was not there. But equally, 7,000 crores of net profit will be there in those 5 years gap. They created fake expenses, like how they mentioned here, payroll, fake employees, fake salary. So both expense and profit side and the asset side was nullified. After many years, due to lot of political pressure and many other reasons, the scam came out. We are not getting into how the scam was revealed, guys, and how they tried to cover it up that time also. What they tried to do, we have Satyam. So this balance was there. How much? 7,000 crores. So what shareholders told in AGM, hey, you have 7,000 crores balance, no, give us dividend. Why are you wasting that money like you're an FD? Then Satyam told, we are going to buy a very big company. That company is very big. Okay, we want to buy this company called Maitas. So for that purchase consideration, I will pay 7,000 crores up roughly and use that money. Then shareholders didn't agree. Maitas is nothing but Satyam in reverse. That much the Dava fellows there. They can keep some other name, no. Okay. And then the scam came out, all of that. Fine. Let's proceed with MCQ. Raju attempted to cover up the scam by proposing in December 2008 that Satyam would acquire Maitas. That's what we have here. Satyam in reverse. Maitas Infra and Maitas Properties, a real estate company. Company is owned by his family itself. Investors backlash followed. They didn't agree. Hey, you're trying to fool us, huh? And on 7th Jan 2009, Raju confessed in a dramatic resignation letter, admitting he had falsified accounts for years. He stated that he was hiding a tiger, not knowing how to get off. How he revealed? He came live in media, in stock exchange, in TV. He confessed openly. What to say? Putting everybody in a shock and panic. PwC India were the auditors, and those articles failed to check the bank statement. No fault on the firm, guys, but as article, you should not take the work granted, because everything you do has some consequence if you don't do it properly. The auditor from 2000 to 2008 failed to perform basic audit procedures like verifying cash balance and sending bank confirmation. Instead relying on management inputs, meaning what is bank confirmation? Going and checking with the bank if the balance is there. They didn't do that. That is definitely their fault. Okay. Because of that only, PwC was banned for many years from doing listed audits. Following the scam, SEBI barred PwC from auditing listed companies for 2 years, citing negligence. The scam shook investors' confidence, triggering regulatory reforms, and is now cited as a landmark in auditor accountability, interpreting of auditing standards and statutory duties under Companies Act. After the scam only, believe me, a lot of policies itself have changed in the country. Okay, are you all with me, guys? Following? Now, first question, as per the Companies Act, whose primary duty it is to ensure that books of accounts give a true and fair view of the financial position of the company. Auditors are board or CFO audit committee, a basic question. It is of course, see, primary duty to ensure books of accounts give a true and fair view. Books of accounts give a true and fair view. Board of, see, who's it, guys? Auditor, whenever you see the word true or fair view, you have to write what? Auditors. See, the confusion comes from books of accounts. Auditor is certifying that financial statements are true and fair, but in that process, he is auditing the books of accounts. Only because I am auditing books of accounts, I am saying FS is true and fair. If books of accounts are not true and fair, how will the FS be true and fair? Are you getting it? Okay, next. PwC failed to verify bank balances, what I told you, and accepted management figures without confirmation. Which of the following statutory interpretation applies to auditor's failure in the context? We are connecting auditor's chapter with iOS. Whether ICA will do this, they may or may not. So what are the rules, guys? Mischief rule, as intention of law was ignored. We are trying to see what auditor missed out. Literal rule, auditor did what exactly was written. As an auditor, can you do what is exactly written? No. You have to go beyond and try to find. Golden rule, auditor must go beyond formal procedures to ensure substance over form. Okay. Strict rule, law must be applied exactly as enacted. What is the answer, guys? C, golden rule. More than the rule, the text of the rule is giving you answer. Next. Which of the following is true regarding auditor's liability for negligence under the Companies Act? Auditor is not liable if management has hidden the fraud. Auditor can easily escape liability if company is unlisted. Have you studied like that? No. Auditor is liable if due diligence and professional skepticism are not exercised. Auditor can be held liable with shareholder approval. What is the answer? C. Because as far as auditor is concerned, whether fraud is hidden or not is not my problem. I can't go in search of fraud. Auditor is not that. There's a saying, okay. Auditor is not here to find fraud. Auditor is here to do a proper diligence and have professional skepticism. That's it. What do you mean by professional skepticism? I'll give an example. Today is a Sunday. Sunday lunch means all of you will want to go and eat biryani. But you are in class, so you can't eat today. So tomorrow you plan to go for eating biryani. So Monday you went to a famous hotel near your locality for biryani. When you are entering and you ordered biryani, when you are sitting from where you are sitting, the kitchen door is open. It was kept slightly open. So you are seeing in. You ordered for biryani. He took from fridge. Sunday extra stock. Okay. He kept in microwave. And by the time you were able to see, the door got closed. Okay. You are waiting. He bought the biryani after 5 minutes after that. Microwave 3 minutes. Okay. You will eat or you will have that doubt. What you will do? Okay, it's okay, I will eat it. All biryani is good. You will eat. Now, and you ate and you fell sick. Whose fault? Of course, restaurant's fault. But if you are having that little bit professional skepticism in the restaurant, not having the temptation for biryani at that point, you saw that something happening, you would have questioned or you would have not had the biryani. Correct? That is professional skepticism. As an auditor, during your duty, if you see something going wrong, you have to go one step beyond and perform duty. Okay. Next. Ramalinga Raju, in a public letter, he wrote that he rode a tiger to maintain the fictitious profits. What is the primary statutory duty of statutory auditor under the Companies Act? To maximize company profits, No, that's what they are doing. Okay. To ensure financial statements are free from material misstatement and faithfully represent the company's financial position. To prepare financial statements to sign only after board approval. Answer? B is the answer. In fact, this MCQ alone could also be tested in audit paper. Are you following, guys? Okay. B is the answer. That's it. With that, we are done with question number 57 in 12 minutes. Thank you. Let's start off with case scenario 63, guys. MTP September 25 series 1. Now we're going to take a little more complicated MCQs. This is one of those complicated MCQs. Neo Technologies is a listed company which was incorporated in the year 2010. It has a share capital of 100 crores and turnover of 200 crores. The company plans to raise through private placement during the year 14-15. The board identifies 180 individual investors and passes a special resolution in the general meeting. In the same financial year, the company also offers shares to 25 mutual funds including qualified institutional buyers and grants stock option to 30 employees under ESOP. Basically, the first para is about private placement. Over here, is the private placement correct? Yes, because the total number of people is less than 200. Private placement can be any amount. With respect to private placement, the paid up share capital and turnover has nothing to do with private placement, and also private placement given to qualified institutional buyers and employees. ESOP is not part of private placement for the purpose of counting 200. Proceed. The manager of the company objected to allotment of the shares as the total number of persons exceeded the limit. Is it exceeding the limit? No. Just now we discussed that. The company has its registered office in, so next concept, in Mumbai registered office. The company registers the registered office. Last year the company opened a branch office in Hyderabad, Telangana. The total shareholders on record of the company are 21,000. Out of this 21,000, only 2160 are residing in Hyderabad. So out of 21,000, 2160 is how much, guys? 10% or more. They're going to ask about section 93, 92, all of that. 93 are going to ask 10% or more are residing in Hyderabad. The management believes that maintaining the register of members at Hyderabad is not a good idea, as in order to maintain the register, at least 1/4 of shareholders should be living in Hyderabad. No, management has not studied Companies Act. Of course, it's just a question. So how much, guys? 1/10 if they reside, it is sufficient. Out of 21,000, 1/10 is 2,100. More than that are there, which is more than sufficient. This could be another MCQ question, or it could be even a 4-mark question. We never know. The company has appointed Arun and Co as chartered accountants, auditors for the 2 consecutive terms of 5 years, from 14-15 to 23-24, continuous 10 years, but 2 terms of 5 plus 5. The firm had 2 main partners, CA Rajan Mehta and CA Nupur Jain, for 24-25 to 29-30. The company wanted to appoint Jain Associates, some other firm. However, it was later noted that CA Nupur Jain is a sleeping partner in Jain Associates. That means common partner. They're discussing rotation. Even though he's a sleeping partner, is it allowed, guys? No. Common partner means common partner. We don't see if he's sleeping or active. The board is of the view that since Nupur is a sleeping partner, there should be no issues in continuing the service of Jain Associates as the auditor. So what they're trying to say, they appointed some other firm as Jain, but in the Jain Associates, one partner is a sleeping partner over here, and he has also been a partner in the previous firm, Arun and Co. Allowed? No. Yes or no? No, not allowed. In Jan 25, the company decided to accept fresh deposits from its members. The company in the past has defaulted on the repayment of deposit to its members in 2019. Now 2025, that means almost 6 years gap, 5 to 6 years gap. The company faced many financial difficulties, but it successfully repaid all outstanding deposits and interest by March 2021. Now the board has passed the resolution to accept 2 crores as deposits from its members. Okay. In deposits chapter, is there any provision that if previous deposits have not been repaid, you can't issue deposits? No. Nothing like that. We have not studied anything like that in deposits chapter. What we have studied is, if deposits is not repaid, other provisions will have an impact, like dividend cannot be declared, You cannot do differential voting rights. Are you following, guys? But deposits, for deposits we haven't seen that. Okay, let's go down questions. Considering the applicable provisions, which of the following statement is correct? With respect to 200 limit, 200 is allowed, correct? Okay. The company has breached 200. No, they have not breached. Company has exceeded limit of 200. No, they have not exceeded. The company has not exceeded 200% limit because QIB and ESOP are excluded for calculation. Answer is C. Easier. Okay. This is which MTP, guys? Latest mock test paper of September exams. Next. The company had defaulted on repayment of deposit but wishes to accept deposits from its members again. What is mandatory requirement before doing so? Sorry? They have to create reserve? No. The company must wait for 3 years. They must obtain a statutory auditor certificate for the same, and 5 years should have been passed since then. The company can accept deposits immediately since it has repaid all previous defaults. Company must seek approval from registrar before making the issue of deposits, and since only 3 years have elapsed from making good of it. What is the answer, guys, for this? Fine. I hope you have checked this. Now, when I told you earlier that deposit chapter, if there's a default, it affects other chapters, you all agreed, correct? Nobody told me, sir, no sir, it's there. How is it possible if there's a default in deposits chapter, it's affecting other provisions but not affecting deposits? Can you think of that? See, you can't issue preference shares unless the existing preference shares are redeemed. So how can you issue deposits unless the previous ones are already repaid? Now this one is deposits from what to say, members or deposit from public. Go above to its members. It is members. Okay. Now, if I go here in section 73, in whichever book you have, in section 73, there is one provision says company will certify does not default in repayment of deposits and interest, and the same shall be certified by the auditor. This is for deposits from members. If there is a default in repayment of deposits, they can issue only after 5 years has been completed. Are you following, guys? When deposits can affect other chapters, it can definitely ensure, what to say, same chapter will be a point. So where is 5 years point over here? Point B, correct? The company must obtain a statutory auditor certificate, that's what we saw, confirming that the default has been rectified and 5 years have been passed since then. So answer has to be B. Over here they have given A, must be an error, guys, so we will change it to B. Are you following? Hello, all of you with me, guys? Clear? Yes? Okay. Next, the company completed 2 audit terms, 5 plus 5, 10 years with Arun & Co, and now wants to appoint Jain Associates as the new firm. But Nupur is a sleeping partner in both the firm. I mean, common partner in one firm is sleeping. Can we appoint? No, not possible. Therefore, see which point is saying not allowed. Appointment of Jain would violate the provisions of Companies Act, as the firm has a common partner with the retiring auditor firm, making it ineligible for 5 years under Companies Act. A is correct. Jain cannot be disqualified as sleeping partner, not relevant. Jain can be appointed since it has partners apart from Nupur also. No, not relevant. Jain disqualifies to be appointed as auditor if the firm, as it needs to be, observe a cooling off of 2 years. The cooling off is 5 years. So answer is A. A is the answer. Clear? We already discussed this. Next one. The board of directors are of the view that they should maintain a register at Hyderabad only for 1/4. We already discussed this for reading the question. What is it? 1/10 is sufficient. So where is 1/10? After passing a special resolution in general meeting, register can be maintained in Hyderabad if more than 1/10 of members reside there. So section 94, so 93, sorry, 93, yeah, 94 and 91 if you read 91 and 94 together, it says if special resolution is passed, 94 only guys, yeah, 94, correct. 94 says we can keep it anywhere else if 1/10 of them allow, and you should also pass what guys? Special resolution has to be passed. Not board, we have to pass a special resolution. Are you all with me guys? With this we are done with the last question in the material and then it's over. Are you following? Clear? 63, if you are watching this as last one, that's it, we are done. Easy or difficult guys? Fine. Case scenario 43, this is taken from the ICA booklet. From ICA booklet I am taking those cases which are big, difficult ones. Okay. Vaishnav, Nilax and Nandish, motivated by strong desire to offer unmatching quality steel products to their customers, entered into the world of steel by incorporating VXN Steel Manufacturers and Traders Limited in Nagpur in the year 2010. Owned by 752 members. How many members? So there are 752 members. The company is involved in the manufacturing and supplying of a wide collection of stainless steel products, okay, formless, whatever, okay. The paid up share capital is 100 crores. Breakup is given. They have also 1 lakh secured debentures and non-convertible face value of 100 each. So 1 lakh into 100 is how much guys? 1 crore worth of debenture, correct? Okay. Next, in addition to Vaishnav occupying the position of managing director, Nilax acting as whole-time director, Nandish who is the office of director, some other people are there. Fine, go through them. Nandini, Radhika, Sambhav, Sarthak, all of them are directors. That's only important for me. Okay. Then someone called Shubh was the company secretary in whole-time employment of the company, looking after all the compliances. Good for them. The company was supported by talent in all the place. Okay, great, very good. Over the years, VXN Manufacturers and Trade Limited attained the faith of customers by offering them quality approved products at budget friendly prices. Okay, that means affordable business. As the lease of the factory is situated in Nagpur, going to expire by end of November 2024. This paragraph has something important. It would not be extended further since owner were unwilling to renew the lease. Directors are planning to shift the business of the company from Nagpur to Mumbai, where the company already owned a building which could be used for factory and also for expansion. In this full paragraph, nothing great. Companies in steel. Where is the registered office of the company already given? Nagpur. Okay, it is in Nagpur. Then they gave the capital structure and debt structure is given. Management is given. From Nagpur they are shifting to Mumbai. Not the registered office, only the business they are shifting as of now. Therefore, all of them had a strong opinion that shifting of registered office to Mumbai would be a workable idea. Fine. With the above mindset, the company started the formalities, shifting of registered office from Nagpur to Mumbai. Nagpur is it in Maharashtra? No, it's in a different state. Mumbai is in Maharashtra. So from one state to another state, and it was ultimately shift. Nagpur is in Maharashtra only, yeah? Sure. Sure, okay, they should actually ideally give that because not everybody knows that. Fine, Nagpur is in Maharashtra only. Sure, you guys are confirming? Fine, Nagpur to Mumbai, both. That means within the state. Shift is happening within the state. Don't worry, I am presuming that in the question they will mention within the state. Okay, they won't ask you questions like remembering what is it? States and all, they won't expect guys. But if they expect, they will tell you are an Indian, you should know that, they will tell. Okay. The company also shifted in August 2024. The company also decided to make capex of 40 crore towards purchase of modernized plant at Mumbai and long-term loan of 30 crores. And also one more bank is giving loan of 10 crores. Further, a decision was taken to dismantle the old plant in Nagpur. So what is happening in this paragraph majorly? They are purchasing some assets by borrowing some money. In continuation, Radhika, director of the company, negotiated with the officials of the bank to raise a term loan of one more 30 crores in due course. The commercial bank sanctioned the loan and disbursed in 3 equal installments of 15 crores, 10 crores and 5 crores. All put together it's 30 crores. Fine. As per the terms of sanction, the next installment of the term loan would be released only after satisfactory utilization of earlier released installment. The security offered was mortgage, the building of at Mumbai, okay, some security. The bank got executed necessary loan documents including instrument of charge on 2nd September. When was the loan given? And the mortgage was registered with central registry. When was the loan given, guys? They have not given the date. Okay. The company had duly maintained all the registers in Nagpur and they shifted to Mumbai after the office was shifted. At the end of the financial year, what is happening? Accounts were made. It was good profit and directors were planning to highlight in the AGM, which was supposed to be planned on 19th September. It was held on the date as planned. Fine. Lot of questions, lot of information, but few key things are they purchased asset, they took loan, charge is registered, and lastly, profit is there. They are having that disclosed in the AGM. Now, come down to questions. It is evident from case scenario that VXN Steel Manufacturers and Trade Limited shifted its registered office from Nagpur to Mumbai at the beginning of August 2024 due to the fact that the current lease of the factory situated in Nagpur could not be extended since owners find all of that. Okay. Considering the applicable provisions, choose the correct option for shifting alteration of situation clause from Nagpur to Mumbai. Ideally, they have to tell you both are same state. They didn't tell this. Okay. Now, this belongs to within the same state shifting of registered office. Now, what is the answer, guys? In order of shifting registered office from Nagpur to Mumbai, must alter the situation clause of its MOA by passing a board resolution with all the 7 directors. Now, follow, guys. Let me go to our notes and show you this so you will get better clarity. Question looks big. We have spent almost 7 minutes in just reading the question. If I come down and go to this incorporation chapter, yeah, here we go. So change of registered office, this is within the state. Same ROC is what I am presuming. In Mumbai there are 2 ROCs, in Maharashtra there are 2 ROCs, Pune and Mumbai. I don't know if Nagpur belongs to Pune or Mumbai. If that's the case, then it goes within the state, ROC to ROC shift will come. But here I am assuming it is within the state and same ROC. So if it is the same ROC, you have to pass a special resolution in general meeting and intimate ROC within 30 days. Come here, look at option C. In order to shift registered office from Nagpur to Mumbai, it has to be alteration of situation clause in MOA by passing a special resolution. Are you following, guys? And of course, I have to change situation clause because address is changing. Registered office clause will change. Are you following, guys? One is done. See, the thing is, these questions are big. A lot of time goes away in reading the point. If you don't have time, try to go for shortcuts. But the best thing is to read it fully because it's 30 solid marks. Okay. Next. You are required to choose the most appropriate correct option as to whether there is any, either the company to register the charge with ROC when the mortgage is duly registered with the central registry. Should I register the charge with ROC? Yes, we have to register, correct? So there is no need to register, no. Irrespective of mortgage being registered with central registry, VXN would require to register a charge with the ROC only after release of all the 3 installments. No. When I receive the payment is later. When the loan is sanctioned, I have to register it. It is necessary for VXN manufacturers to register the charge with the jurisdiction ROC within the time specified from September 2nd, even though the mortgage is duly registered. Correct answer is B. Are you following, guys? See, the question is trying to tell you the mortgage was registered with central registry. Maybe it's some other department or whatever, but we have to register with the ROC within 30 days of September 2nd. Even though there are 3 different installments, will you register the charge on the date of loan or after receiving installment? Date of loan. So date of loan is 2nd September. That is why option B is correct. What is wrong in option C? Option C is saying after receiving installments only I will register it. Not like that. Following. Okay. Next. Due to non-renewal of lease and also to explore new genre of business growth, VX and steel manufacturers and traders decided to shift Nagpur to Mumbai. In addition to passing special resolution, it was required to obtain approval of the central government approval by filing INC 23, and such application will be accompanied with a list of creditors and debenture holders. Okay, this they are again referring to this case. So here they are saying within the state Pune to Mumbai, if that shift comes, then you have to give what, guys? You need to get approval of regional director, approval of creditors and directors, and for that what are the options, sir? List of creditors and debentures must be drawn preceding to date of filing application. Look at this, in our material also we will have it. List of creditors, where is that? Yeah, RD has to approve the same within 15 days. And where did I write list of creditors? Obtain consent of creditors for the same, and such a list should be a latest list that we get. Okay, now come back over here, look at the points. List of creditors and debentures must be drawn up to latest practicable date. Creditors and debentures, latest practicable date, not more than 1.5 months. No, first point is saying more than, not more than 1 month. Second point is saying not more than 1.5 months, 45 days. Third is saying not more than 2 months. Fourth is saying not more than 15 days. What is the answer, guys? Generally it is, yeah, look at this here. Here we have it in rule 30. Creditors and debentures list not later than 1 month from the date of application. Are you following? So we come here, we will see answer is B, not more, sorry, A, where is 1 month? Not more than 1 month, so answer is A. Are you following, guys? Clear? Next, it is mentioned in the case that AGM was held on September 19th. Company want to deliver the notice by post to all of them. You are required to choose the correct option from the dates. So what is the correct option? Notice must be delivered by post to all those who are entitled to receive it, and service shall be deemed to have been affected expiration of 24 hours after the letter containing AGM. No. Next, then service shall be deemed to have been affected after 48 hours. Correct? Post means 48 hours. Here they are putting 96 hours. Here they are putting 72. That's it. I don't have to read anything else. So what is the correct one? 48. I will pick it over here. Clear? This question is not complicated. It's just the time consuming. Time consuming is the one. That's why we are also taking it lengthy. Let's try to see if we can do it faster. After reading the case scenario above, I just read. Why are you saying the same thing? Okay. The company has secured non-convertible debentures which did not carry voting rights. Okay. Keeping in view, you are required to choose the correct option. 9% debentures, attractive 9%. Nothing great is there in question. They are asking us to again pick the correct option. Oh, they have not even typed D here. Fine, okay. Answer D is not even typed. How do I show D for you guys? Okay, what are the other options? Let me just figure out the correct option. The terms of issue has issued 9% debentures for more attractive coupon rate 9%, including voting right exercised by debenture holders in the general meeting. Voting right were made available to debenture holders till the expiry of the 5th year. Here had 18% more attractive. Include voting rights. Here also include voting rights. That means the option will actually be no voting rights. Correct? Can debentures have voting rights case? The question is which did not carry voting rights redeemed on 31st December 2029. In all the three options they have given include voting, include voting, include voting. That means the correct option D will be what? Will not include voting rights. Later I will add it here, guys. So those who are watching recording, the soft copy of this will be revised later with option number D. That's it. With this, question number 43 has come to an end. See, these kind of questions when come in exam, can you guys tell me how you will save time? 2-page question, and even questions are so big. What you will do for saving time? Read the question first and then come above and search in the paragraph. If you find the answer, good. Otherwise, again read the whole paragraph. Ideally 30 marks. In law paper, if you can finish in 30 to 40 minutes, it's a game changer. You will save a lot of time for rest of the paper. That's about it. We are done with this case also. So let's start off with case 15. If you see, guys, overall out of the 60 questions that we have, around 20 to 30 I'm reading paragraph and reading options. But in exam, what you can also try is reading the options, trying to figure out the answer, and then come up about the paragraph and search. This option is actually not recommended. The right way is to read the paragraph and go to options. But if you want to save time, you can go to the options first, read the options. If you can answer, and then read paragraph later. When to adopt this method? When time is not there. Sometimes when you do in this method, the question will mandate you to read the whole paragraph. That time you don't have an option. You have to read. Which option to choose? Your choice. But next set of few questions, including this question onwards, I will be going in the reverse way. With respect to loan advance of Siddharth to Silver Private Limited, whether the same can be classified as deposit. For this we have to read the paragraph. With respect to accept of deposit from members, which of the mentioned is correct? This we can answer. Accepting deposits from members. Silver Private Limited cannot accept deposits more than its paid up share capital, which is 100 lakhs. Sorry, 50 lakhs. Sorry, 50 lakhs. Silver Private Limited can accept deposits of 60 lakhs from members as it is less than twice its paid up share capital of 50 crores, whichever is less. It's a private company, guys. Silver Private Limited cannot accept deposits of more than higher of aggregate of paid up share capital and free reserves, which is 70 lakhs and borrowing with 65. Silver cannot accept more than aggregate of paid up share capital. What is the answer, guys? How much of deposits can you accept from members? Yes. We will read the paragraph because we need. I want to know how much. First of all, I want to know what is the paid up share capital. Only then I can do this computation. Okay. Go to next one. Is Silver Private Limited required to appoint internal auditor in accordance with the provisions of Companies Act? For internal audit, again you need limit of one of the 4 limits. Go up, see if you can find any limit. What is limit for internal audit, guys? 200, 100, 50, 25. But for private company, 50 and 25 is not there. So 200 lakhs will be turnover, 100 lakhs will be paid up share borrowings, no? Correct? Correct. So here, paid up share capital, is it more than 200 lakhs? No. Correct? Not there. So no need internal auditor. What about borrowings? Is the borrowings from banks more than 50, borrowings from banks is 65, and they also want to give deposits, correct? Deposits. Turnover is how much, guys? 200 lakhs. It has to be more than or equal to 200 lakhs. Correct, guys? The number is more than or equal to 200. Here turnover is 200. That means they have to appoint internal auditor. No need to check any other limit. Come down. Should they appoint internal auditor? Is not required, as private companies are not required. No, that is not the option. Private company also has to appoint. Has this required to appoint internal auditor as borrowing is below prescribed. Is required to appoint as aggregate of paid up share capital. Okay, is not required as a turnover is less than prescribed limit. Answer they given is D. Is there anything else with respect to turnover in the question? Turnover decreased or not? The limit is more than or equal to only, no? For turnover, let me quickly cross check, guys. So looking at the option, it is yes, 200 crores or more is the limit. I very well remember. So if I come here, this company Silver Private Limited is having a turnover of 200 lakhs. Okay. Crores, guess correct. I didn't see this. It's in lakhs here, guys. So 200 lakhs is nothing but 2 crores. Correct? Are you following, guys? So another common mistake that we can do, like what I just did now, is taking this 200 as crores and proceeding, but it's actually in lakhs, guys. So option is correct. What is the option? Silver. Oh, sorry. This one. Silver is not required to appoint internal auditor as turnover is less than prescribed limit. Go to next one. So I finished third one without reading paragraph. Fourth one. Which of the following statements is correct with respect to the loan of 65 lakhs availed by the company? Needs to create and register charge within 30 days from the date of sanction of loan. Next, is not required to create and register charge as the loan is against personal guarantee of directors within 15 days or within 60 days. Definitely it's not 15 days. Definitely it's not 60 days. My doubt will be, is it option A? Okay, because 30 days, or they are saying option B is against personal guarantee of director. Personal guarantee of director, we will not create a charge. Charge is created only for tangible and intangible assets, not for guarantee. But I don't know whether in this question they gave guarantee or asset. So I have to go above and again search for it. Reverse. I'm doing this question alone in reverse because you guys asked for it. Just search quickly. Do you find any charge of 65 lakhs loan? It's given anywhere. Okay. The company has not defaulted. Okay. The loan. Okay. The company has approached the bank for working capital and availed loan of 65. That's what we have here. The loan is secured by personal guarantee of the directors of the company. Therefore, it's not by tangible or intangible asset. Therefore, my answer will be what, guys? B. Personal guarantee. So, I finished question 3 in reverse. I finished question 4 in reverse. Let's go to question number 5. The management of Silver Private Limited for ease of doing business and reducing compliance is to be registered as a small company. Can this be a small company? Again, we need to go check limits. What is limit for small company? Turnover is 40 crores. Paid up share capital is, here turnover is definitely not crossing 40 crores because it's only 2 crores. Paid up share capital is only 50 lakhs, and even looking at the reserves, it's not even coming close to 1 crore. But I should also check, is this company holding or subsidiary of any other company, or is this company a section 8 company or something? I will just scan through the entire paragraph. Holding, subsidiary, better to read if you ask me in my view, because when we scan we will not find. By quick scan I don't find any holding subsidiary words. So come down. Answer is it a small company? Yes, because it's within the limits. It's less than 4 crores and 40 crores. So answer is C. Proposal is valid. It requires the fulfillment of limits in paid up share capital and turnover. Okay, next question 6. The financial particulars of ABC Limited of immediately preceding year is given. Okay, net worth is 280, turnover 550, everything is in crores now, guys. Okay, net profit 5.5 crores, borrowing 60. What is the correct option with respect to CSR? Okay, come down. Okay, first of all, for this company, CSR applicable? Huh? Yes or no? What is turnover limit of CSR, guys? Net profit 5 crores, net worth 500 crores, turnover 1000 crores. This is the limit for CSR, which you will remember. Now here net worth is not crossing, turnover is not crossing, but net profit is crossing in the previous year, so CSR is applicable. So if I come down over here, yes, answer is no, is not the correct answer. Turnover more than 500 crores but less than 800. We don't have an option like that. C, as the company is having net profit more than 5 crores, that is the answer. What is CSR section number? 135. You all remember because it's an important section number. But the section 135 itself has hint how to remember CSR section number, because 135 keep only net profit in mind. What is net profit limit? That 5 is here, 5 crores. You will take average net profit of last 3 years. That's what this 3 represents. Average profit is how much? 2% of last 3 years. What is 3 minus 1? 2. So 3 minus 1, 2% of last 3 years if profit crosses 5. Sometimes if you get confused in exam, 5 crores 6 crores 3 years 2% for that. Okay. Come down over here. Question number 7. Under what circumstances is the company required to constitute a CSR committee? I will constitute if the CSR spend is more than 50 lakhs. Come down over here. Does not exceed 50 lakhs. No. Exceeds 50 lakhs. Does not exceed 50 lakhs. Exceeds 50 lakhs. So answer is B or D. 1 second. Constituting a CSR committee is waived. Okay, I'm sorry guys. Question is about waiver. Okay, when you don't need CSR committee, when it's less than 50 lakhs, so it's not B and D. Does not exceed 50 lakhs and does not exceed 50 lakhs. What is the difference between these two? The shareholders assume the responsibility of CSR committee in C. The board of directors assumes the responsibility. Who assumes responsibility? Board of. So answer is A. Are you following, guys? Okay, fine. We still have, so we were able to answer all the questions except 1 and 2. For 1, what is it? Whether it can be treated as deposit or not. Whether the loan advanced by Mr. Siddharth. Go above. Where is this Siddharth fellow? First paragraph. The company is in manufacturing some rubber parts. Raj and Pavan are the directors. Siddharth, son of Raj. So director's son. So director's son is relative for the company. Correct? So relative of the company. On 28th Jan, advanced the loan of 50 lakhs and interest of 8%. And the loan is expected to be repaid after 36 months. Now we advance the loan. Yeah, we have given. Correct? Intends to accept deposits of 60 lakhs from its members for the purpose of expansion of its business. And director's son gave us a loan. Is this a deposit? Yes or no? Hello? We would have studied in the what is a deposit and what is not a deposit. Money received by directors and relatives for a private company is not a deposit, but provided you give a declaration of the same. Correct? Come down. So answer will be, it is not a deposit. Do you remember, guys, deposits chapter? We have a lot of points as to what is a deposit, what is not a deposit. In that, director and relatives is not a deposit, provided they give a written declaration. I told you that written declaration, it's given over here. First one done, guys. Second, what is the maximum amount of deposit which from members that you can get for a private company? If you remember, for a private company, guys, the maximum deposit a company can get is 100% of paid up share capital plus free reserves plus securities premium. Yes or no? Private company can get maximum 100% of paid up share capital plus free reserves plus securities premium. But if you want to get more than this, then you have to satisfy some limits. It's a standalone private company. The company has not defaulted in filing financial statement and annual return, and the borrowings should not exceed 2 times of paid up share capital, correct, or 50 crores, whichever is less. One point is there. I don't want to interpret that, that's a separate discussion, but come here. Same, this is the, sorry, this is the question, no? Yeah. So here the paid up share capital is 50, and what are the deposit they want to issue? Look at this case. Question says I want to get deposit of 60 lakhs. My paid up share capital is 50, free reserve is 20, SP is 10. That means my current net worth is 80, and I want to accept deposit of only 60. Allowed? No. So far it is allowed. But what is the question asking? With respect to accepting deposits, which of the below mentioned statement is correct? Silver cannot accept deposits of more than paid up share capital. This is wrong. Correct? They can accept up to how much now? 80. Correct? Up to 80, and they want to get only 60, which is allowed. Silver can accept deposits of 60 lakhs from members as it is less than twice its paid up share capital of 50 crores, whichever is less. See, this point is relevant only when you want to accept more than 100%. But what is option C? Silver cannot accept deposits of more than higher of aggregate paid up share capital and free reserves, which is 70 lakhs, and borrowings, which is 65 lakhs. No. Here what is missing, guys? Securities premium is missing. So definitely C is wrong, A is wrong. What is D? Silver cannot accept deposits of more than aggregate paid up share capital and free reserves, which is 70 lakhs. Again, no. You will take free reserves plus paid up share capital plus. Yes or no, guys? Do we take SP? Yes. So option D also is wrong. So which is closest over here, which is correct for me? B. Actually, in my view, B also is not correct for this question, because for this question, with my limit being 80, I can go up to 60, but here all the other 3 points are straightforward wrong. B is correct if you want to go more than 100%. Therefore, I am going for B. Do you all agree, guys? More than 100%, you should cross. It should be, what to say, 100% of paid up share capital plus free reserves plus securities premium. Nowhere they have used SP. So in my view, this whole MCQ itself is wrong, guys. But in the given options, B is the closest wrong answer. Actually, okay, fine. I am going with B because answer is given as B. Otherwise, all 4 are wrong. In these kind of MCQs only, ICA will play with you. No correct option. Did I get the correct marks? We don't know. Sometimes it happens like that. We can't do anything. Okay. With that, this question 15 comes to an end. Case scenario 17. Tech Inspiration Private Limited, incorporated on 30th June 2018. The main object of the company was to provide guidance class for engineering aspirants. For this purpose, they opened a coaching center at Freedom Plaza, somewhere in Agra, guys. Okay. The premises was owned by the company. The company also made an employee appointment committee for the systematic selection and appointment of employees, including faculties for teaching. Okay. In the first slab, committee appointed 9 teachers, 3 clerical staff and 1 peon. For the purpose of expansion of business, company decided to open a branch of the company near Agra. After research, company wanted to open one more in the city, Bharatpur, which was just 50 kilometers from Agra. They are expanding the class, case instead of CA engineering. That's it. The company approached Mr. Raghuram Meena for some land. Raghuram Meena leased this land for 10 years to the company. The land had a small temple of Lord Ganapati at its center. The company constructed the classroom on the land and many students joined the coaching classes. Beside it, the temple generated some income in the form of donation for the temple. Okay, good business model. Mr. Raghuram Meena claimed the income of temple with the contention that he had leased only the land and not the temple. So what happened basically, the coaching institute took a lease of land. In that land there was one temple. So the coaching institution conducted the coaching institute around the temple, and from the temple whatever hundi they put, we collected. Now that owner is saying that, what to say, hundi money is for me. Understood the issue? Okay. Further, one more problem arose in the company. The employee committee found that one of the faculties, Nitish Gupta, was not performing well. Bad faculties. You guys know better who are they. He was not justifying his duties. Therefore, the committee decided to terminate him with effect from 31st Jan 2024 and send him a notice of termination by properly addressing and by registered post to Nitish Gupta. Nitish Gupta refused to accept the notice. Say, I am a good faculty. He didn't take the notice and returned it back to the postman. They are mainly discussing service of post concept in immovable property in a General Clause Act. After 2 months, on 1st April, Nitish Gupta filed a suit against the company for claiming the salary for the period 1st Jan to 31st March. Okay. With the view that his appointment cannot be terminated because of 2 reasons. He is saying the committee was established just to appoint but not to terminate. We saw in General Clause Act, if a committee has the power to appoint, they have the power to suspend and terminate. Nitish Gupta refused to accept the notice of termination with the contention that it was not properly served to him. Was it properly served to him? Yes. Look at this. Above itself they gave the hint. It was properly addressed and through registered post. If I send it to the proper in that way, notice has been deemed to have been served. That means this faculty has to be removed. Answer the questions. General Clause Act MCQ. Whether Raghuram Meena is correct in his claim, whether he may claim the income of temple. Income of temple, can they claim, guys? Hello? Proper case, can they claim? Now I have leased the land. Now land is an immovable property. Go to the definition of immovable property. If I go to General Clause Act, okay. Follow, guys. Yeah. If I go to General Clause Act, definition of immovable property, guys. Yeah, here we go. Here. Look at this. Immovable property is defined as what? Look at this. Answer is there in the provision itself. Immovable property shall include land. That's what I leased. And benefits to arise out of land and things attached to the earth. And things permanently fastened to anything attached to the earth. Things attached to earth is the temple. We have attached it by ourselves. And from there I am getting the benefit. Therefore, the income from temple is for whom, guys? For the coaching institute only. Correct? Because this land immovable property includes what? The temple, which is benefits arising out of land, the hundi. So answer is yes. That's what I am saying. This definition of immovable property. Raghuram Meena was correct in his views as he leased. The temple is a constructed building, not land. Even if it's building, it is immovable property because it's attached to the land. No, immovable property in terms of GCA includes land, benefits arising out of land and things permanently fastened. So benefits attached to land and income from temple will be for Inspiration Tech. Inspiration Tech is the coaching institute. So why they are saying no here? No, we are saying no to the landowner, Raghuram Meena. No for you, land, only land is yours and you have leased it. So you have also leased the benefits. Are you understanding, guys? Understood question now? Next. Whether employee committee may terminate Ritesh Gupta? Yes. Why? Because the act says that power to appoint also includes the power to dismiss. So where is that? Unless a different intention appears, power to appoint includes power to suspend or dismiss. Option B is the answer. Next. Whether the refusal to accept the notice sent by post to Nitish Gupta would be termed as serving of notice of termination. It is correctly served. So look at this. The service by post shall be deemed to be affected by properly addressing, prepaying and posting by registered post. Therefore, refusal to accept by post by Nitish Gupta is not valid. Answer will be C. In fact, when we read the question itself, we figured out what the three options could be. Yes, sir. Got it, guys. That's where we got the three options. Done with the question. We'll move on to the next one. Understood? Easy, guys. Okay. Are you getting some confidence in MCQ? Hello? Fine. Let's start off. Case scenario 55, own research. In 2020, actress Alia Bhatt launched an eco-conscious kids wear called Edamama. Initially operating as a sole proprietor with Ranbir Kapoor as an informal business partner. Okay, some clothing brand for kids wear called Edamama. She also included her minor daughter Riha in the business structure for future benefit planning. So three people started the business: Alia Bhatt, Ranbir Kapoor and their daughter. Upon the advice of CA Karan, they considered converting their business into either a company or LLP because they were a sole proprietor. Now they are, Karan is always advising everybody. So they wanted to convert to a company or LLP. To help them decide, he gave some differences. Okay, he said, come sit down, let's have some coffee. And he gave some differences, guys. LLP and company, some difference. I am not reading that, guys. You know that audit not mandatory, all of whatever. Okay, LLP, all of that. Next, come down. The main advantage of LLP was lower cost and ease of compliance. Since Alia and Ranbir have ample funds, a lot of money, and aimed for rapid scale, they want to grow. They opted to convert into a company. Okay, this brand what I have mentioned here is actually a real brand. This Edamama, if you go on Google, it's actually a brand for kids which is owned by Alia Bhatt. Really, okay. Other facts I'm just making it up, guys, but the brand is real. In 2023, Reliance Group invested in Edamama in phases. So they saw Edamama growing. So they said, we will buy this company. In Jan 23, they put 10%. April 23, another 15. September, further 26, totally making it 51% by September 2023. Now Alia and Ranbir are planning further dilution of equity. They want to dilute the equity little more. During the 2024 AGM, shareholder Blue Satyam questioned the lack of consolidated financials. Okay. Blue Satyam is a YouTube reviewer, guys. Leave it if you don't know. Question the lack of consolidated financials. They are saying you are supposed to do consolidation because who is the holding now? Reliance is holding up to 51%. You have not done consolidation, he is questioning, arguing that since Reliance acquired shares in stages, consolidation was not necessary. See, this is which year? 2023. So Jan, April, September. That means this belongs to financial year 23-24. Leave the first one. Jan 23 is previous financial year. But this financial year is April to March 23-24. So for AGM of 24, look at this. During 2024 AGM, that Blue Satyam is saying consolidation is not there. Alia Bhatt is saying why I should do consolidation. It happened only in phases. This is the question. Fairly simple. Let's go to the questions. Can minor Riha, okay, who's a baby girl, be partner in LLP if Alia Bhatt is a legal guardian? Can minor be partner in LLP? In partnership, minor can be a partner. We all studied in foundation because left, right, center, that question will keep coming in exam. LLP, can minor be a partner? Have you studied anywhere in LLP Act minor as partner? No. So answer is no. Minor can only be admitted to benefits of partnership in a traditional firm, not for LLP. Are you following, guys? This question is to communicate that minor cannot be a partner in LLP. What you studied was for partnership in foundation, not here. Are you following, guys? Clear? Otherwise, what you will have chosen? Yes, sir. Guardian. Clear? Not in syllabus, sir. We don't know what to do. Next. What is the appropriate method for Alia and Ranbir to further dilute their shareholding in Edamama? That means currently in Edamama, if you see, 51% is with whom? Another 49% is with whom? Alia and Ranbir. Now they don't want this, they want to dilute this further. Which one? Which one, guys? Rights issue, will it dilute the percentage? No. Offer for sale, will it dilute the percentage? Yes, they are going to sell their shares to somebody else. Okay. What about private placement? In private placement, they are issuing new shares. Okay. In public offer also, they are issuing new shares. So percentage will go up for everybody overall. So offer for sale is the only one where this 49 somebody else will take. Salman Khan, he's coming and taking 49. Are you following, guys? So answer is no. Private, what is saying? Dilute the shares. Follow, guys. Leave the option here. Now here answer is given as private placement. No, look at this. In private placement and no, answer is still D, guys. We will change it to D only. Let me explain the difference over here. See, in rights issue, dilution will definitely not happen. But in private placement and public offer, what will happen? They are going to issue new shares. So proportionately, this 51 also will drop. This 49 also will drop. Somebody is getting new percentage. Are you getting it? In private placement and public offer. So everybody will reduce. Even Reliance will reduce in private placement and public offer. Only in offer for sale, their existing shares of 49 is given to Salman Khan. Reliance shares will remain as it is. Are you getting it, guys? Are you following? In BCD, dilution happens, but real dilution happens only in D. Offer for sale. Clear? Are you all with me? Hello? See, there is no answer for this in suggested answers because I made the question and I made the answer. Okay. Clear, all of you? How many times can Adamama make private placement in a financial year? How many times? I can do private placement only once in a financial year. Or multiple times up to 200. Only once per financial year. Only twice with central government. Unlimited if central government permits and consent of all members where it's not exceeding 200. Unlimited, but each offer must not exceed 200. What is the answer? What is the answer, guys? Go to the section 42. If I show you 42, whichever book you have, guys, it should be the same answer. Okay. If I go to private placement, look at this. If I go to private placement, look at this. In one financial year, such offer shall not be made for more than 200 investors. The limit of 200 will exclude the following. Nowhere they are saying like buyback you should do only once a year. Private placement there is no limit of once a year. You can do multiple times, but maximum for 200 people. That is 100% sure. Are you following, guys? I am trying to confuse you with that buyback 1 year and private placement 1 year. How many of you got confused? Any one of you got confused? Yes, good. So what is the answer, guys? It is unlimited, but each offer must not exceed. Actually, not each offer. For the whole financial year itself, it should not exceed 200. I can even do 100 offers. But all offers put together, maximum 200 people. Are you all with me, guys? Following? Hello? Next. Which of the following is a correct advantage of choosing LLP over a company? Sir, I didn't read the dabba above. It's okay. You know LLP and company. Tell me. LLP is preferred for listing on stock exchange. Correct? No, only company can be listed. LLP enjoys lower compliance and cost advantages. Yes. LLP can raise public funds easily like a company. No. LLP must conduct AGMs just like company and act. No. Are you following it? So what's the answer? Enjoys lower compliance cost. Answer is B. B is given. Are you all with me, guys? Hello? Last one. Say, I want you to think of the answer 1 second before me. Okay. Reliance acquired Edamame in April, whatever, reaching 53. Blue Satamaran claimed that consolidation of affairs is not required. Is he correct? Blue Satamaran claimed it's required, no? questioned lack of consolidation. So we will change it here. Okay. Claimed it is required. Remove the word. Is his claim valid? Okay. Yes. Since acquisition happened at different months. Yes. Consolidation required only for listed companies. No. Once holding crosses 50%, consolidation is mandatory regardless of acquisition timing. No, unless Reliance controls the board directly. We leave the question. Which of the options is correct? Hello? Is the first one correct? Yes, since acquisition made a different timing, nothing to do with that. Yes, only for listed companies, nothing to do with that. Actual answer is 3. No, once holding crosses 50%, consolidation is mandatory regardless of acquisition timing. Here question actually is written as what, guys? When consolidation is it not required? No, it is required here. Are you following, guys? Question drafting issue, leave that. My question is consolidation not required? Answer is no, it is required once it crosses 50% regardless of acquisition timing. Are you understanding? Clear, guys? That means what I am trying to communicate here, guys, follow. Even in the financial year, even if on 31st March only it crosses 50%, then for the whole year I will do consolidation, but the whole year will be taken as pre-acquisition profits. 31st March only will be taken as post-acquisition. Are you following? Clear? It's not about consolidation, or it's not percentage on 31st March. Any day in the year, if you cross 50% and if you are holding as on 31st March, then consolidation is mandatory. Are you all with me, guys? Hello? With this, we are done with question number 50.